That's a pretty good element they have. I mean, they've all got them now, generally Uber. I'm not so sure about Grubhub's, but I know Uber and DoorDash definitely have those reward programs. And there's a lot of that kind of stickiness with the customer that is really important. So it sounds like they have a pretty good, like, foundational customer base now, and maybe some of that super intense competitive element with the other delivery services has been priced in at this point, maybe, because Uber stock has done very well too. And if they're both doing well together, then maybe we have kind of reached some equilibrium in this market.
It's about time, because I feel like this market was, the business models of a lot of these companies didn't really make sense to me. The way that drivers wanted to be paid more, then us as consumers were complaining the fees were too high, and they are really high.
It's absurd.
Yeah, that hasn't changed.
It's more expensive to order now than eat out for a lot of restaurants.
100%.
I did the math.
100%. And that's where I don't really even understand how everyone is affording this in this economy. But
well, we're not.
I mean,
we're running it up.
That's exactly true. But I mean, it is amazing to me the way these companies have fared what has been this storm of, like, no one's spending, no one's doing this, no one can afford goods over services. I guess this would be somewhat a service, but it's not it's not cheap. I mean, this is a service you pay a premium for. So amazing to see they're still able to grow the way they are. All
right. Another winner, ELF. In the makeup category, the big leader seems to be still holding that position.
So ELF looked a little bit more promising off the open here, and I'm being greedy because we're still up, I mean, almost 10% here, but it was up like 15% right when the bell rang. So I thought this was going to be another monster move. But nonetheless, I mean, this stock has been a clear outperformer. Ulta was one we looked at and we were like, this is like a barometer for really the overall consumer. That to me is fallen off a bit. e.l.f. looks, I mean, like really, really strong. And we talked about this yesterday. It's the power of the dupes, the cheaper makeup products. People are trading down from some designer makeup products, and e.l.f. makes really high quality products for relatively low prices. So they did report really strong earnings. Third quarter revenue just blew past estimates at around $215 million. Third quarter earnings was around 82 cents a share, also well above the 51 cents expected. Revenue was up 76% on a year-over-year basis, while gross margin came in around 71%. And they highlighted they continue to lead exceptional, consistent category-leading sales growth. But what was even more interesting than that was their CEO said they are expanding into various international markets as part of their overall growth plan, but that continues actually to exclude China. They said that really they're known for selling some of these cheap, more trendy items at drugstores, and they right now pulled a lot of their online businesses from Asia last year and still not interested in the high structure and distribution costs of that market. So actually they see it as a cost benefit to avoid China, and I thought that was so interesting, in the way that they're faring this year has been quite strong, all things considered, even without, I mean, like, the second largest developed country in the world. It's amazing to me, but perhaps the street likes that. They're able to see that as more of a cost burden rather than a cost reward. Right now, cost control is so imperative for so many of these consumer-facing companies. So seen as a win here. I mean, we're up 10% off the open. So this is like the complete opposite day of what we discussed yesterday off the open, when it was like a bloodbath in earnings. Both really strong reactions today.
All right. Yeah, nice. Okay. Backdrop for the market certainly helps, but two companies that are showing some good numbers here. ELF continuing the strength, DoorDash kind of continuing the surprise and the comeback story. Thanks, Jenny Horn. All right, let's talk some tech. And another big consumer winner, too. Jeff Pierce joins us, Senior Manager of Derivatives Trading. Since we're on the subject of food and delivery, let's talk some Starbucks first. It seems like long overdue the stock has finally come back and impressed investors again. Jeff, it had just been kind of beaten down for like 2 quarters straight, and this morning jumping 10%. What's the surprise here?
Yeah, we've had some excellent numbers. I think same-store sales are really the focus point for investors here. If we look at earnings per share, it beat at $1.06 versus the 92 cents expected. That was up 31% year over year. Revenue beat as well, $9.37 billion versus the 8.76 that was expected, up 11% year over year. If we look at revenue in North America, that was up 12.5%. Internationally, revenue rose 11.4%. Again, global same-store sales rose 8%. Analysts were looking for just 7%. Most of that was driven by higher average customer check, as well as a 3% rise in transactions. Same-store sales in North America, that was up 8%, 5% internationally. If we look at China, which has been a big concern for Starbucks. It's their second largest market, and they've had some recovery trouble. That same store sales rose 5%. They saw customer traffic increase 8%, even though average ticket sales were down by about 3%. If we look on the outlook side, they're expecting revenue growth of 10 to 12% for the full year. They expect earnings per share to be between 15 and 20%, and they expect global comparable sales growth of 5 to 7%. So a pretty good report out of Starbucks this morning.
All right, double-digit top-line growth for Starbucks. That's really good stuff. This is hard to come by in the restaurant business, and something that has kind of been reserved, cranks out gains every quarter or so. The fact that Starbucks is in the mix like this is, I never thought it was like a bad situation. It just seemed like the market was really worried about China. It was worried about a while back about who's going to run the company and how they're going to deal with labor and stuff. But I don't know, all that does kind of strike me as secondary to the fact that this is now as much of a staple for breakfast as it is coffee. And that was such a huge, huge development for them. Any time of day too. I'm popping in, I'm getting that bacon Gouda, baby. You can't stop me.
Yeah, I feel like anytime you hear people saying that they're trying to take a break from a certain product, it must be a good product, right? Which I hear all the time about Starbucks. Same store sales in China, if you look back at that, I think that was one of the biggest issues. If we look at over a year ago, we had same store sales falling almost 16% in China. That zero COVID policy certainly dragged on revenue and same store sales. And, that comeback has been really tough. And to your point, some of the issues they've had around leadership, some of the issues they've had along the way have certainly been headwinds, but the company still continue to show strength. I think this report was, obviously a big one for investors, seeing them up almost 10% this morning.
Okay. All right, let's get into the tech stuff here. We've got Qualcomm with the rally going into Apple. It was at 52-week lows. Remind us here what the market liked about this last night. Just a clean report?
It is a clean report. Earnings per share beat at $2.02. Revenue beat at $8.66 billion. Both of those numbers were down. Revenue was down 24% year over year. But if we look at that QCT segment, that's the largest division. They sell the processors. That revenue came in at $7.37 billion. It was down 26% year over year. Handset revenue declined 27%. Automotive revenue, however, was up 15%, which we know is an area that they are really trying to diversify more into. Internet of Things revenue fell 31% to about $1.38 billion. That's kind of important because it includes Meta's Quest headsets as part of their, part of what they supply for. The QTL, which is really the licensing segment, that was down about 12%. But if we look at the outlook side of it, they're expecting earnings per share for Q1 at $2.25 to $2.45. Analysts were looking for around $2.23. Revenue, they're expecting between $9.1 and $9.9 billion. Analysts were looking for just $9.2 billion. So a pretty good outlook. It looks like some of the demand for the headsets, the 3G, 4G, 5G headsets are all starting
6G,
to come back.
7G.
Yeah, exactly.
All right. So Qualcomm still in the mix, even if it's losing a little bit of its Apple connection and is now an Android primary provider. That's a big market, and I think maybe that investors perhaps overstated the way Apple's kind of distinction from them is going to hurt the stock. Nice little bounce off 52-week lows. Palantir next, 20% rally. We're firing off all cylinders here this morning, Jeff.
Yeah, this is one where it'll be difficult for you to find something that you don't like in the report. Revenue up 17% year over year at $558 million. Earnings per share 7 cents versus 6 cents was expected, up from the penny we saw last year. We look at commercial revenue. That was up 23% at $251 million, well above the $234 million analysts were expecting. That includes about a 33% increase in U.S. commercial business, a 19% increase quarter over quarter. Government side, that segment rose 12% to $308 million. That did come in below analyst expectations of $321 million. But the adjusted income from operations, $163 million, well above their guidance. Palantir said they closed about 80 deals worth $1 million or more, 29 deals worth $5 million, and a dozen of those are worth at least $10 million. And on the outlook side, I think this is really a big part of the push we're seeing here this morning. They raised the revenue guidance for the full year to $2.21 to $2.22 billion. It was previously $2.21. They also raised their income from operations guidance to 607 to 611 million. Previously, it was just 576, and they continue to expect GAAP net income in each quarter of this year, and this is the fourth quarter in a row of GAAP profitability, which also, by the way, makes them eligible for the S&P 500.
Okay, look at that. Palantir, maybe overdue. Always been loved by its devotees and its shareholders, but doubted, and also a pretty frequent short too. So I guess they are winning that debate right now with the stock pushing back to year highs. Only one small catch is that the year high is about half what the other high is going back to 2021. So maybe we should wait till we get a real breakout to think the thing is fully trending upwards and has a potential to get back to the records. PayPal, don't want to miss that one, Jeff, because it had been generally a train wreck in this stock over the last several months. You know, they've got these like tentacles into like the crypto world. I feel like maybe are kind of backfiring on them a little bit as they're talking about coins and stuff. But at the end of the day, they are such an embedded part of the payment system. I've had a little trouble figuring out why PayPal's shares are doing so poorly. Can you explain? They're up a little bit today.
Yeah, I mean, the inflation headwind, certainly the concern about, discretionary purchases a bit have weighed on the stock. If we look at the report today, I mean, I think it's a pretty good one. Earnings per share, $1.30 versus $1.23. That's up 20% year over year. Revenue, $7.4 billion versus $7.38 billion. That's up 8% year over year. If we look at total payment volume, that rose 13%. Payment transactions totaled about 6.3 billion. That was up 11%. The company ended the quarter with around 428 million total active accounts. That's down from 432 million, but they've talked a lot in the past about that plan to really focus less on the accounts and more on the transaction side of the business. Operating cash flow came in at about 1.3 billion, with free cash flow at about 1.1 billion. For Q4, they expect $1.36 in adjusted earnings. Analysts were looking for around $1.40. Revenue 7.81 to 7.89 billion. Analysts were looking for 7.98. Full year, though, they expect earnings at about $4.98. That is above the $4.95 that they previously guided.
Okay. All right. So a little bit of surprise to the outlook, and markets running with it. They also said yesterday that they got a subpoena from the SEC about their dollar stablecoin that they're engaged in. So we'll see how that goes. All right. I don't know if that's a boon or a burden right now with what's going on in crypto. So in the meantime, little update to the guidance. Market likes it. Shares up, along with so much else this morning. Thanks, Jeff Pierce and Jenny Horn, for taking us through the movers. When we come back, let's talk some autos. Hasn't been too pretty for the auto trade over the last couple months. We saw a Tesla breakdown after earnings. Of course, the labor strife at the legacy automakers has been a negative catalyst so far, with fresh 52-week lows in General Motors and
think that it's going to have some upside. Maybe it's going to be limited upside. This is a type of strategy that might work in this environment. And I looked in that December monthly cycle where I'm going to buy a slightly in the money call, the 210 strike call. It's got the higher delta, reacts more like the stock. And then against that, I'm going to sell 2 of the 235 strike calls in December and then buy 1 of the 240. So I'm doing an unbalanced or broken wing butterfly here where I'm going to pay roughly about an $8.80 debit. There's your risk. It's probably closer to $9. The stock has moved up. But if you pay $8.80 on this, you're buying, in essence, in this strategy, a $25 wide bullish call vertical, offsetting some of the cost by selling that $5 wide call vertical on the 235, 240. Unbalanced broken wing butterfly, that means you've got one break even of 218.80 on this one. Everything above that's profitability. And then you have that little kicker there at the short 235 strike where you make the most money. But even above 240, it's going to be more than a double on this type of strategy. So this might be the way to play where you can offset some of the costs, but still taking advantage of a grind higher in the shares over the next month and a half.
All right. Okay. Interesting. So, and kind of fits with some of the positivity here that we're hearing from Garrett. Okay. Garrett, what about the others? I mean, do you have a favorite? If we are morally obligated to own a legacy name, which should we?
Our favorite name is actually Ferrari. They just reported earnings this morning. It was a great quarter. Their 13th straight beat, and they raised their full year guidance. This company just continues to fire on all cylinders. Obviously a luxury automaker, but if you go back, you look at the longer term, the story, what they did about 3 or 4 years ago, they used to cap their annual production at about 7,000 to 8,000 vehicles a year. They would produce and sell no more than that. And they've lifted that cap. This year, they should produce and sell about 13,000 vehicles. And so that's really driven the earnings growth here in recent years, and really posting the strongest earnings growth that we've seen across the entire industry. So we reiterated our buy on the stock this morning.
Good morning. November 2nd.
Along with Tesla, our 2 favorite names in the industry. We have holds on
taking a little quiet morning here.
And we have some
thanks for joining, guys. Hope you guys have a good morning so far and had a good evening. We are going to be streaming the stock market today, watching stocks, trading options, dailies, on the SPY, watching GME, AMC. A lot of earnings coming out, a lot of earnings still coming out. Looks like risk on. We've got big gap up on the market. A lot of gap ups on earnings, some gap downs, a lot of movement, a lot of volume. Should be nice and active and volatile. Should be good trades to set up. Sub up, like up, comment down. Happy Money sticks around. You can follow us on Twitter at HappyMoneyYT. We have a Discord server. Link to both those are in the description.
Only if Ferrari's, stock
I'm going to put a link
kind of
for
coincided with their losses in F1. I watch a lot of F1, and Ferrari seems to have problems
in
every single
chat
week
as well for our Discord. It's where you
if
join.
you're looking at GM,
Morning, Guts. Good morning, Sterling.
Getting a nice little bounce here. Hit over
Didn't even know you left.
3-year lows on Monday. They're going to have wage problems.
There's
here.
our Discord. Thanks for your likes, guys. Appreciate it. About 30 minutes from the open here.
We've seen some of the OEMs actually pull back some of their investments in EV because they're just not making any money. They're
just
losing
being
money.
very patient. Not trading the first
on,
hour has
General Motors, so I've got
usually suited me pretty well. Seeing,
of,
let the market shake out and
or a neutral type strategy here using the option market.
Get people trapped.
On this one, so I went out to the December 1st month.
Yeah, so I'm thinking if we get a double top up here, I'll probably grab some puts.
On this one, I'm going to sell an iron condor, but I'm using the same common strike as the
body. Maybe a starter in there to add to it on a channel break.
Iron butterfly, or sometimes
break to the upside, I'll just be waiting.
Iron butterfly, where I'm going to go out and sell the 29 strike call.
Break to the downside, I'll look for bounce on low of day, or maybe position on an inverse handle.
Because I want to stay risk defined in this type of strategy. I'll look at buying the 25 strike put on the downside.
A lot of big movers
the
though.
33 strike call on the upside.
Earnings,
so it's basically a $4 wide short iron condor.
Gobi's up 22, which
with
is
that same common strike on the 29 where you're selling the call and the put.
Open door 21.
About a 210 credit on this. That's what you
I don't know if all these have earnings, but Palantir did. They're up 20. Shopify's up 20.
That neutral strategy.
Dash.
Where your break evens are just below
Dash is up
27 on the
18
downside and just
on
above
earnings.
31 on the upside. So
Okay.
you've got a nice
Loop
wide
TV,
range. If it starts to consolidate
and
here,
Root,
remains near that. I
Firm.
believe he's got about a $30 price target on this. So this
A lot of
works
this stuff's been
well in
sold
that
off heavy, so if they
environment.
had
You're taking advantage of positive time decay.
any
or
sort of
data on this one also.
glimmer of
So
hope
neutral
on
strategy,
earnings,
You do have some risk on it, but
getting
you're
a
staying
big
risk defined.
relief bounce.
And betting that it
Bobo's
finds the
up
floor
11 and a
pretty
half.
much right here.
Yep.
With that trade. Okay, thanks, Tom. For the trade.
Laser.
Thanks, Garrett Nelson.
Wish is up 9. AI is up
Let's
9.5. Jeez.
Hour 2 when we come back.
Carvana,
We do have another data point.
9.7.
We'll look at factory orders and then we'll prepare for
Negs
Apple.
up 10. Camping World 10.5.
Event this
Starbucks
afternoon.
11.
Stick around.
Yeah.
Lots to
A lot
prepare
of these
for.
have just been pumping. Tupperware's up 9. Wish is up 9. Lyft is up 9. Might be getting a Santa rally. Run's up 7.
I was born on the south side of Chicago.
Sending a message out to the Theta Farm. Gotta close. Close on a position. Up 70% on it. Time to close it. Been rolling some of these for quite a bit with the market selling off the last 3 weeks, 4 weeks especially on these. So just a little relief rally is all we need on cash secured puts. Some of these I held through earnings, which isn't my ideal way to do it, but you kind of get stuck. Sometimes that's all you need. So yeah, send a message out to the Theta Farm members on YouTube. Market's doing the VWAP chop. I'll wait. $20 million. Nice cuts. Well done, man. That's awesome.
And stomach this higher for longer environment possibly.
Well, that's where tomorrow's going to be important too. We can't forget about the employment report because the last one was such a eye popper with 300,000 jobs. We're expecting that number to come back down to something more in trend. But I mean, who knows at this point? And especially when you hear still a lot of commentary about how the economy is going to hit the wall in 6 months because we're racking up too much debt and credit and yada yada, consumers going to break. Well, if we still got jobs, which the data show we do, and the paychecks coming in, then it's reasonable to think that runway for our landing.
I'm waiting for more than just a channel break here on SPY.
At this point.
There's no head and shoulders, there's no double top. So just be patient. We'll see if we make a low of the day. We bounce off the bottom of this channel.
It does appear as if that runway not only long, but also possibly a little bit padded, right, in many ways. And I think that's why we've seen the lift
So I might be waiting a while on this play if I'm waiting for it to bounce here and then come back all the way to the top of the channel.
I think the product to keep an eye on in terms
pretty much what I'm saying at this point.
I
might go long down here, but
obviously, we're focused on the dollar. We're focused on rates, right? Tying it into the central bank, the financial narrative there. But keep an eye on crude oil. This is a product to watch not only because of the geopolitics, right? If that were to worsen, we'd be looking at 95 or prices above that to potentially pose a bit of a headwind for stocks. But the fact that we've been coming off, right? The fact that crude oil has been relatively range bound and contained. We're going back to looking at the move that we just saw from November, basically, in sideways consolidation in this 80 to 95 range, right? And so again, holding off that upper extreme, coming off now amidst some of these demand concerns, right? With higher crude oil or higher rates, ultimately, you can see how crude's kind of settled into this range as mentioned again. So you're looking at 80 to 95. The recent spike we saw up and down 95 had a lot of the traders, a lot of the bulls concerned because it was retesting highs we saw from last year around that time, the fall of last year, and it also was right around the time that we saw a lot of calls for $100 barrel oil, triple-digit crude oil. So the fact that we've come off, I think, is significant, but this is oftentimes a gauge in terms of economic strength here in the U.S. because everybody's talking about rates going lower. In theory, that's probably not going to happen until the economy starts to soften a little bit, and crude at these levels not indicating that the economy is softening by any means, especially when you consider that we just reported record production here in the U.S. this week. So the fact that we're holding up right now within this range here, even on the bigger picture, you can see, again, 67 up to that 95 level, kind of comfortable in the middle of the range here right now there, and within this range that we've been in over the last a month or so here. So definitely watch this in terms of an indicator because, again, a weakening economy, lower rates, in theory, we would expect to see crude break down.
And it's holding its own. You know?
Absolutely.
It seems like we gave back the geopolitical bid.
We did.
But we're holding the steady economy bid in crude.
Absolutely.
So, you know, that level pretty well defined here, too. So many times we got up to 80 bucks, couldn't get through, and now we're holding it as support, which is notable.
Unfortunately, at a stubbornly elevated level, but not necessarily where it's going to create a headwind for stocks.
Yeah, true. All right. Thanks, Ben. Appreciate it. With a look here at the economic data heading into tomorrow's employment report. Let's go back into the earnings, though, and let's bring back Mr. Kevin Green for a deep dive on Apple. Most important report of, I think, every earnings season, frankly. You know, yeah, NVIDIA and all those are fun, too, but this is the
nice pump on all these risk-on assets. For sure.
Definitely. This is around 7.5%.
Earnings mixed with just overall froth.
So it is a significant report, obviously.
Yeah, I saw that Dish was up pretty good too.
So the market is actually looking at revenue coming in at 89.0.
They didn't have earnings. Theirs isn't for like next week. So
1.4% on a year-over-year basis.
A little push.
But if you're looking at the adjusted earnings per share estimate,
that coin's
right
up
now,
6.
that is at $1.39. That would be a 7.75% increase on a year-over-year basis. The implied move from
the option market can finish this inverse cup. Give us a little handle.
Now, one thing to note: this is actually the lowest IV going into an earnings announcement for Apple since October of 2021. Seeing a lot of activity in the 180 calls as well. So there's some call side skew, and rightfully so. Analysts have actually reduced their expectations for Apple. Actually, it's very low. So they should be able to hopefully beat both on the top and bottom line. Now, iPhone continues to be the main revenue driver for Apple in itself. Right now, it's around 48.5% of total net sales. And the expected iPhone sales for Q4 are actually supposed to come in at $46 billion. Now, a month and a half ago, that estimate was actually at $50 billion. So we've already seen $4 billion shaved off. to account for potentially a weakening economy or
Oh,
weakening
is
demand
Apple after
in China.
hours? Wow.
And once again, we are going to be looking at the services revenue. That's kind of the forgotten
We also
area
have,
of this business that continues to show pretty good growth as well
see.
as really healthy margins.
Oh, yeah,
The
initial
market
jobless
is actually
claims this
expecting that
morning.
to come in at $20.39 billion.
Oh, that's where that pre-market started rallying.
6.3% increase on a year-over-year basis. So all in all, Oliver,
U.S. productivity, U.S. unit labor costs.
Setup, you could
Factory orders came in at 10.
Potentially a bullish move to be had here, but we're going to have to also
Didn't seem to do much.
commentary for the call, especially that demand in China.
I tested that.
But we've seen a lot of companies that
low.
have been able to, that did not have great earnings like AMD, but once they get on the conference call, really, talking up their book for the forecast moving forward, Apple could do the same. That could also make the stock rally to the upside.
Moment when AMD came out, it didn't seem like it was going to be a huge, blast off style report, but it was. So I'm glad you bring that up because so far that seems like the real test of like valuation for a key tech name so far this earnings, and they did kind of pass it. The only catch though is that the shares for AMD had been kind of declining for like 6 months from the high. Apple, lower highs too as we're looking at on the chart. But at $176, basically where we were at the COVID high. So we're kind of like battling with that level that was the COVID high in Apple. Of course, we surpassed it to make a fresh record this summer. But, now I guess we still are kind of testing the valuation for this stock. And the growth component to it is not as booming as some of the chip makers tied to AI are going to tell us, or like the cloud companies have as their baseline. We're not talking like 20% growth here, right? I mean, Apple's not going to crack mid-single digits, will it?
It would be, I don't believe so, no. So that's the answer. I don't think that would actually happen. What would actually have to occur here is either a significant jump in like Apple TV, which is one of those segments of the business that's still kind of new, but has been actually gaining some traction when it comes to market share. That could be something that drives that revenue over the top, or maybe we do not see a weakening in China. But unfortunately, all of the channel checks, when you're looking at their suppliers, for the most part, has indicated that we will see a little bit of a soft number when it comes to China. But once again, Oliver, it's all about the expectations for the street and what they are able to print. So if the street has already discounted their iPhone sales by $4 billion, which is a significant amount to say the least here, you would think that the market would be able to at least be satisfied if it came in line with that number. If it does come in at a 48 or 49 print, I think that would be bullish, obviously, for the upside here. You can also make a technical case too. It's in like a bear flag formation, right? Hitting the top, coming down into a channel, making lower lows, higher lows, or lower lows and lower highs, but that also could be a turnaround, strategy from a technical standpoint. I think the multiple, it always trades at a premium. Especially when the market is a little bit uneasy when it comes to the outlook for the economy. So a lot of people try to attach maybe a 20 multiple to the stock, and if they do so, you can make a case that the stock should be priced at around $130. I'm not sure if we can get down to that level just because of the mechanics right now, but we'll see with the earnings announcement here. If we do see weakness, I think the market is already prepared for that. And once again, there's more of a call side, upside move being priced in rather than a downside move right now.
So it would be a huge beat if they show any top line growth, a single digit, because this is expected to come in for the fourth, right? It's 4 now quarters in a row of annual declines. So, I mean, and the thing is, like, there are plenty of companies that are showing growth still on an annual basis. Are they the big ones? Not really. But there are a few chip makers that we've talked about. Is it the whole semiconductor sector? No. But this is still, a bit of a problem, I feel like. Call me crazy. I feel like if you're going to trade a stock like it's a consumer staple, like a safety trade, it should have at least meager growth.
I agree with you. I mean, as you're talking about it, I mean, when you're seeing the revenues either coming in flat or a slight decline on a year-over-year basis, stock continues to get bid up. So, I mean, at the end of the day, the market sets and dictates the price. And that's why we kind of go back to that notion too. If you're looking at maybe that average multiple where it would typically trade in a decent market, you can make the case that it's really overvalued by around $40, $45 right now. But the market, once again, will put a premium in this name when there's a macroeconomic uncertainty that's going on. So you also have to kind of take that into account. It's always going to really trade at a forward multiple at a premium compared to what the market is doing right now. So once again, the technical setup could be made that, yeah, maybe it's fading to the downside here. You can also say, once again, a bull flag or, you know, a bear flag or bull flag that's actually taking place here. So it's kind of like a make or break moment. And we will know today if it's going to fade or if it's going to trade to the upside. But once again, the market's really positioning for the stock to move to the upside. I would say, not unfortunately, but that's just the nature of how traders are really, you know, positioned right now.
Okay. Yeah, it's a really interesting technical situation because that kind of flag coming down finds the old COVID support. Maybe that acts as help here, but if it breaks through, then that would be a pretty big deal. So we'll find out. Is this a valuation without growth that the market will tolerate? All right, appreciate it, Kevin Green. Let's do some trading. Joe Teagate, portfolio manager of the Rational Equity Armor Fund. Joe, how does Apple fit into your strategy right now?
Yeah, well, I mean, it's one of the biggest, most important stocks in the market. You cannot hide from it. And even if you don't own Apple, you have to own Apple because it's just such a big component of all the indexes. So it is just out there. It is just a piece of everybody's portfolio. So for me, this event is something that could be a source of risk. It could be an area where, you know, it's a big uncertainty. And, you know, we do see big moves off of these earning events. It's had a really nice run in the past day specifically, gone up from 170 up to 176. So maybe some positive news is priced into this event. I think the upside, I'd love it if it raced through, but I think the upside post this earnings event is limited. I want to protect the downside. I could do that with owning stock by putting on a risk reversal, buying the put, selling the call. I'm actually going to display a call spread, which is the same risk profile as owning the stock with the risk reversal. So I'm just looking at the NOV 170, 180 call spread. That'll cost me $5.90. Below 175.90, I'll start to lose money on this trade. Max loss, of course, is my 590 that I laid out. And
market's kind of wedging here.
$10, so I'll make
I think it's a bullish pattern. Needs to break the upside though.
Okay. All right. So the 170, 180. You're pretty much trading in the range that it's in right now.
Might pick up a call on the bottom if we retest it.
This is looking for some support roughly around here, but you get about a little less than $1 of breathing room to the downside?
Yeah, so, you know, I'm not necessarily looking for a huge breakout to the upside. I do think, you know, it skews to the upside, maybe a slight increase for the rest of the month is kind of what my base case is here for Apple. But I do think there is risk if there's a negative report to have a big downward
or we might break out right
here. I know I'm going to be stopped out at 170, so $5.90 on the call spread. So for me, using options to trade it like this is much better than just owning the stock and hoping for the best ahead of a pivotal, potentially market-moving earnings event like this.
All right. Okay, so the call spread, almost $600 to put it on. Looking for a little bounce. No downside. Need an Apple to hold the line here. Thanks, Joe, for the trade.
Thanks,
manager of the Rational Equity Armor Fund. Yes, sir. All right, straightforward. Call spread looking into Apple earnings tonight coming up. We'll shift gears a little bit. On the downside today, a few healthcare names, but the way to spin it positively is that it's the COVID names and the vaccine makers, and it seems that it is not as in vogue, of course, as it once was. On the flip side, the spotlight has been stolen by obesity-fighting drug makers. We'll talk some biotech next.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the
See if it wants to break out. Rather take calls at the bottom of this wedge. I'll take some here though. If you get a retest on the top of this channel. And if we keep rounding. That volume, real? It's just hitting that horizontal support or resistance. I wanted the short, but I don't want to force that on the market if it wants to rally first. I like the gap fill. I like that play. Could just be trading in this range for now. Okay, I'm out of that.
phase 3 programs that they're hoping to launch by 2025. And I think where we're mostly focused on is on the respiratory vaccine, what's called an RSV, which
Could
is
still break
indicated
out,
for
but
the
I'm
adult
fine not
population.
chasing it for now.
And this is also goes by mRNA 1345.
And that's going to be for what type of respiratory ailments?
Well, RSV is the ailment. It's quite contagious. Most people contract RSV before they're even 2 years old. I think the market's going to be driven by the under 2-year-old cohort, and also the ability to dose pregnant women. So that's maternal immunity passing to the baby. Again, 1345 right now is indicated for adults, and I think the more interesting aspect of the competitive landscape is one, there's somewhere upward of 12, is possibly as high as 16 candidates entering the RSV market over the next few years. So it's going to be increasingly crowded. And Moderna's already behind GSK with their RSV vaccine. And there's Abismo and Abrexy are already launched. They were approved earlier this summer, and I think they're going to really struggle. It's GSK's Arexvy and Pfizer's Abrismo. And but where our specialists are coming out is don't count Moderna out just yet. I think near term, their RSV vaccine is going to really struggle. But because of their mRNA platform, they can eventually launch an RSV flu vaccine or some combination vaccine, maybe incorporate a next-gen COVID into that. And we think that will propel Moderna into a leadership position, despite it being increasingly crowded.
Okay. Well, love the specific details on what comes and the competition as well that they're going to be going into, Lee. Real fast, though, before we let you go, we can't have a healthcare conversation without talking weight loss drugs, right? I mean, it seems like the spotlight very clearly has been shining on this area. Do you have a favorite? Do you think that the market's response has been appropriate, outlandish, something in between?
Yeah, I mean, this is a fun topic to discuss. Obviously, the current players are Eli Lilly's Mounjaro, which is a dual-acting drug, GLP, and it's certainly doing quite well. We saw Lilly's revenue rocket by 37% year over year to roughly $9.5 billion, and easily topped consensus of $9 billion by roughly 5%. A good part of that was driven by Mounjaro. It delivered $1.4 billion and beat consensus by nearly 12%. Another type 2 diabetes drug, Jardiance, also posted impressive growth. It was up 22% year over year to just over $700 million, but it still fell short of really robust consensus expectations. Here's the story. Mounjaro is only approved for type 2 diabetes. Now they're working for FDA approval in weight management or obesity, however you'd like to frame that indication. They directly compete against Novo Nordisk, which has 2 drugs that use the same active pharmaceutical ingredients. So they've got Ozempic, which is semaglutide, and it's indicated for type 2 diabetes. And then they have Wegovy, which is also a higher dose semaglutide, but that's separately branded and indicated for weight management. Where this gets interesting is near term versus long term. There's all kinds of, I think, hyperbolic discussions, but supported by some management commentary on what this means even outside of healthcare. We have airplane analysts talking about the average weight of passengers going down, so they're going to save on fuel costs. We have Krispy Kreme kind of blaming these drugs on top line pressures.
What about burgers? Are they getting looped in? We got to jump because we got the Red Robin CEO coming up, Lee. He's not going to lose customers because of weight loss drugs, is he?
Yeah, I mean, you've got obviously the big Coca-Cola and Pepsi and Nestle and all of this, right? But I think short term, what people have to realize, and I'll make this quick. I don't know how long.
No, we're running out.
All right, so reimbursement's constrained outside of type 2 diabetes. These drugs cost about $1,000 a month out of pocket. So uptake is going to be driven by two things. One, really restrictive insurance coverage that won't pay for it until more competition arrives and we see more pricing competition. And second of all, both Wegovy and Mounjaro, and to some extent Ozempic as well, are supply constrained. I mean, both companies are having a very difficult time keeping up with demand. And so near term, I think some of these draconian expectations in terms of the negative impact on industry laterals is probably overdone. But longer term, what I would suggest is sensitivity or scenario analysis around terminal value. Anyone that gets geeky on stock valuations knows how important long-term terminal values are.
Sure thing.
They typically drive 60 to 70% of current market valuation. And so it's not inappropriate to maybe take a sharpened pencil to what you think the long-term impact could be, and that can translate to near-term price volatility.
Let's continue that conversation because we've got one of the best takes I think I've heard on it so far, a very reasoned analysis of it that gives us some good things to think about here as the market's gone so ballistic over it. Lee, thanks a lot for the details. Great convo. Lee Brown, Global Sector Lead for Healthcare at Third Bridge. All right, let's go from diet, pills, to some fresh, new, revamped burgers at Red Robin. Joining us is CEO and President back from Red Robin Gourmet Burgers after earnings, GJ Hart. GJ, welcome back to the show. You're not worried about all these people not eating anymore because they're taking pills, are you?
No, we're not, but I have to laugh. Look, I'm glad to be with you, by the way.
Thanks.
I think it's too early to see if it's good. We're not going to come up with any claims or anything relative to that at this point. So we'll watch it and see what happens.
Hey, I'm looking at your guys' website, which has continued to adapt over the past year throughout our conversations. New burgers with better ingredients, looking pretty tasty. And you've also got burn-in steak fries loaded that are looking like they might be, someone's cheat day. If it does get to a point where people are like going stock and business by business in the restaurant world saying what's healthy, what's not, where are you guys on that spectrum?
Well, look, we're constantly monitoring what we need to be putting on our menu, what our guests are asking for. In this most recent menu, we added 2 non-fried appetizers. One is Brussels sprouts. They're selling like crazy. So it's certainly an indication that there's a desire for some of these healthier options, and we'll consider to look at that. At the end of the day, we do have some healthy options on our menu. And as I said, we'll continue to create innovation around it.
How is the traffic going since you guys have been moving through the rebrand, the refreshing of the business?
Yeah, well, as you know, as we've discussed before, when we started on this comeback and developing this North Star plan, you can't do everything at once. And it started with the proper staffing of our managers and then staffing our restaurants, bringing back positions like having bussers, having an expediter in the kitchen. That's the last point before it hits the guest table.
Used to be my job.
So we've done all that. And then moving through to where we made those changes to flat top cooking mid-year. And then recently, a few weeks ago, we launched our new menu where 85% of our menu has been upgraded with new ingredients, higher quality ingredients. And so far, we're really, really optimistic and very happy with the momentum that we're gaining.
Do the new ingredients, does the enhanced supply line with the expo person there, does that raise costs? Are you able to do these things at an efficient price? How do you gauge what's worth what at this point? Because you're still operating at a loss as the last earnings just showed.
Yeah, well, look, we've made significant progress around that. But I'll just bring you back to our North Star plan. A part of that plan was that we would work with our vendor partners to really look to upgrade ingredients, but yet lower costs and be effective where we can lower costs. And we've done that. In the first 3 quarters of this year, we've saved over $7 million. And of course, we've invested significantly more than that back into the business. So it's all part of a bigger plan to become more efficient, raise the level of quality, and to raise the level of execution. Last thing I would say is the guests are definitely responding because our overall satisfaction scores continue to improve. Our overall sentiment ratings are significantly higher, and it's early, and these things don't happen overnight, so it's going to take some time. But we're pleased and pleased with the momentum that the business has.
And as you're rebranding and building out and perfecting the family experience in the restaurant, what about the delivery side that's become an important part of really any food business at this point? Take us through what you guys are doing there.
Yeah, so clearly third party and delivery business is a big part of the business. It will be here to stay. It has declined a bit, and ours has declined a little bit more than normal because we made a conscious decision to exit virtual brands. And virtual brands was half of the loss that we lost during the quarter, and that was a conscious decision to focus on building the Red Robin brand to be sustainable as it has been for 54 years. And so we feel like we've got a little bit of work to do around our delivery and execution around off-premise. But again, in this comeback plan, the first part was making sure we could deliver on the in-restaurant experience, and then from there we'll go to the off-premise. And we're clearly that's in our sights right now.
GJ, I wanted you to just follow up on a comment that your team made on earnings. I believe it came from your CFO, Todd Wilson, about kind of the ups and downs, the cycles of a consumer business. And it seems like there's uncertainty from your team on whether or not some of the headwinds you see in the industry are temporary or kind of a real turning point. Can you give us any idea what you look for to know if that consumer is softening up meaningfully?
Sure. Well, look, at the end of the day, it is uncertain, right? Clearly, the industry has slowed down a bit during the quarter. We've all reported an uptick here recently, and so we monitor it consistently through traffic. And we monitor those sales daily, hourly, weekly. So we clearly have our sights on it. It's just with us, it's a little bit has a little bit more noise in it because we've put so much change in the brand to bring it back to the way in the heyday of Red Robin. And so that noise, that's good noise, but at the same time, we have to monitor that to sort of what's the underlying business really doing. And as we reported in the quarter, with some of those conscious decisions that we lapped over, if you really, look at the math, and if you look at, we reported 300 basis points improvement in guest traffic in the beginning of this quarter over the third quarter, clearly we're seeing some uptick here. So again, it's uncertain, but from our perspective, we're optimistic.
Okay. Thanks for the details, GJ. The market is happy with it right now. Shares up 13% almost. We'll be in touch.
All right, thanks a lot. Take care.
Yeah, absolutely. GJ Hart, CEO and President at Red Robin Gourmet Burgers, RRGB, having a good morning. All right, coming up, two charts in preparation of earnings, Jack Dorsey's Block and DraftKings.
My dad was a hard worker. He used to do side jobs installing windows.
All right, SPY made its move. Like I said, it could break out from here. I got distracted. I got on the phone, so I didn't open anything back up. But there's your wedge breakout. The SPY is just melty. Up 1.5%.
When the Fed is not being aggressive, but by the same token, if there is an upside surprise, the market looks very out of whack here. I mean, there's also, of course, Apple too. I mean, just chart-wise, we were talking about earlier on the show, the lower highs, the lower lows in Apple, Chris. I mean, if Apple trades above roughly like 200-ish or so, then you know, we've got an epic comeback happening, but that's a pretty far ways away. Maybe like 185 would be a decent little pop. I mean, what's kind of the role that you think that stock's going to play here?
Apple needs to see some of the offset of what's happening in China with the iPhone sales, the new release on the computer. I think Jenny was saying earlier, that's going to be like the full time around next quarter. So if they do come out and they are on point, it's not too much of a miss. We may end up seeing that move up there around that 180 or so, and then that would be a good shot for them to move to the upside. Anything else that's negative to them probably close out the gap that happened this morning.
All right, Apple after. And then jobs in the morning tomorrow. We got a busy 24 hours.
It's a big revenue number that they're looking for, 89.4 billion.
Yeah.
They missed revenue last quarter, 81 and change. They missed
still
by
contracting
several million.
though.
Still contracting, right?
Yeah.
So EPS last quarter was 126. Consensus is 139 is what I'm seeing. You know, EPS they beat by 6 or 7 cents last quarter. Look for that revenue number. If that revenue number comes in light, I think you could see downside here. If they find a way to muster and beat on revenue, and they don't talk as much about iPhone generally anymore, but if they find a way to beat on that, they just raise prices on services. They got new computers coming out. If that revenue number beats, I think that's where you're going to really keep your eye.
All right, yeah. If iPhones show a pickup into the holiday season, that'd be encouraging. Great thoughts, Nick Theodorakis and Chris Perkins. Appreciate it, guys. That's it for us here on MTL. Thank you for joining. Have a great day. I'll see you this afternoon for an extra long show to accommodate those Apple earnings. Don't miss it. It's a classic 2-hour MOC starting at 2 p.m.
You dream about Taylor Swift? You guys getting puts? Wait for the little shoulder up here, or a break of this channel before I start getting puts. We hit the top of the channel, I might get some, but it'd be better if we actually don't make it there, doing some tapering. Kind of wish I didn't get distracted on the phone. This was a nice trade. See what those. I took a smaller position too because I didn't get at the bottom of the wedge. See what those would have been. Like 80%. Not bad. Nothing crazy. Nothing crazy. I was planning on going big today. Going slow, going seldom, and going big. So that's still in my mind, and partially why I haven't really taken a trade yet. That was just a little trade on the potential breakout, but wait for the next one. Probably be to the downside. 11 o'clock, we have 30 minutes till power, or 30 minutes till EU close. Power EU. $11 likes today, appreciate it, guys.
Into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have a big show for you today. We have the big three. We'll take a look at names like Planet Fitness, Snap, JD.com. Alan Nuckman has 3 bullish trades for us. In our 360 spotlight, we'll dive into athleisure and talk winners and losers in the space ahead of the holiday shopping season. And later, the CFO of Elf Beauty to talk about the company's latest earnings report. In the meantime, take a look here at the markets. You can see up arrows again with the Dow at 391 points at this moment at 33,665, up 1.1%. The S&P is up 1.5% right now at 4302. NASDAQ gaining 1.5% at 14,878.
Thanks, Bubba. Yeah, that helps me with actually picking trades when I'm just planning to go bigger.
Oil's at 81.40, gaining about $1.
Makes me just much more selective.
That's up almost $4. And the US dollar comes
Kind of
back
interesting.
a
It's
bit,
like, oh, you want to do small position sizing until you're ready to scale up. And that's true, but there's a point I think where
for a look at what's moving and some of the top
you don't have enough like skin in the game. You just don't care enough, and so you just then you start kind of gambling with smaller amounts almost. That you're going to put a large enough amount.
Your thoughts? What's going on here with Starbucks?
Yes, Starbucks pacing for
You want it to be
best
good.
day in over a year. I mean, shares were up as much as 11%. They've since given up some of that strength. It's still a 10.5% move to the upside here, Nicole. Not too shabby. And a lot of this was due to the fact that consumers are still willing to not only pay for their Starbucks, but they'll pay a premium price for some of their favorite drinks. So that seems to be benefiting Starbucks. And they did highlight the fact that these premium beverages are becoming now this new normal as it relates to mix and customization. Their company CFO did highlight the fact that average ticket size in North America rose 6%. Well, it was up 5% at some of their international operations. So as a result of this, they are not seeing a drop in demand really at all for their various food and beverages in the current environment. And that sentiment is something that is so
these ones I had here, they're up.
It feels like it's all about the way you can frame your narrative moving into the back half of this year. If you're able to give really signs of strength and optimism, seems like the street is really rewarding your stock the day day after. So no surprise to see this nice move higher, but it just was interesting the way the company highlighted that they've seen this name in different shape than it was back in 2008 or other times of, say, inflationary, recessionary pressures, and as a result, they've diversified their channels and they're more prepared to deal with the economic turbulence that we've seen. So that was really, really optimistic, and just goes to show Starbucks is essentially a consumer staple. It's something people are willing to pay a premium for, with no signs of that stopping, Nicole.
Yeah, unbelievable. Good numbers today. And then we have Qualcomm, which is moving up about 5% today. Your thoughts there after the earnings report, which we covered here on the show yesterday, late day.
Right, so Qualcomm, another name that's making a nice move to the upside. It's up 5% here on the session, which is, I mean, outside of what even the street had been pricing in. Market had only been anticipating around a $2 move in either direction. We're up almost $7, $6 today now here. As a result, we've seen so many analysts of these strong numbers. I mean, we're come in, update their coverage. We saw Qualcomm report better than expected fourth quarter results, really strong first quarter guidance. They reported revenue that was around $8.7 billion. That beat expectations.
Bond auction 11:30.
It did also rise on a
4 week
year-over-year
and then an 8 week.
basis. Now they do say for
That's
the first quarter
balance
revenue, they expect around to 9.1 to 9.9
At
billion.
4:30.
Earnings around to 225 to 245 a share. Now they did highlight the fact that this is still a company that, you know, has a pretty solid dividend. They're still paying those out regularly. They highlighted some of their growth prospects into the back half this year, which was really positive. But like I said, analysts really still upbeat on this name. We saw actually Rosenblatt as well as Susquehanna, Bernstein, and JP Morgan were just a few that all raised their
Got 'em
price
before
targets,
earnings.
while all keeping that really strong conviction. So Street loves Qualcomm, and nice to see this 5% move that's held throughout today's session thus far.
All right, Jenny Horan, thank you so much for that. Appreciate it. Markets correspondent, really appreciate it. All right, let's get some insights in the news shaping the markets. And for that, we welcome in Michael Ranking is with us, senior market strategist here at the New York Stock Exchange. Thanks for being here. So we got to see, once again, a pause, back-to-back pauses. What did you think of the language yesterday? What was
We
your
got
takeaway?
options you're holding for life?
So, well, thanks again for having me, and it's nice to be here on a day where there's some green on the screen.
Yeah.
Look, I didn't really think there was anything all that
30% on
surprising
Roku.
in what we heard from Fed Chair Powell yesterday, right? They did stay on hold as markets had widely expected, and he tried to take a pretty balanced approach in terms of how he described kind of the economic backdrop, the inflation backdrop, but at this point, like, that's really just falling on deaf ears, right? And markets are kind of looking past that. I think they really just saw how comfortable he was in terms of where the current monetary policy stance is, right? And we're just seeing markets start to kind of sniff out, the end of this tightening cycle. But I think it's also important to just understand where we were kind of coming into this week. We'd been down for 3 consecutive months, right? And we've, this sell-off has kind of gotten a little bit long in the tooth.
And, he was talking about tighter financial and credit conditions, that those could weigh on the economy. We're waiting on that jobs report tomorrow. It's interesting because things seem to be going in the right way when you think about inflation. And there are concerns, right, about the lag effect of these rate hikes, and they do take time to get through. But the job market's still been pretty tight. What do you expect going forward for the economy?
Right. So, I think we're at that point where we're going to start to see, right, like the higher interest rate environment starting to impact things. And we've seen that actually a little bit within earnings season, right? So this morning you highlighted, the fact that Starbucks had very strong earnings, right? We saw the payments processors also putting up, very solid results, suggesting that the consumer remains very strong. But what we are starting to see kind of some weakness is in kind of areas that require financing. So the consumer is willing to spend, but when you start to look at things like autos, appliances, where people have to finance, that's where you're starting to see a little bit of slowdown within the economy.
Look, Target was talking today, was out talking and saying that consumers are being more cautious. And even in the grocery section, they're being more selective with their shopping at Target. Overall, he was saying like the number of units and the amount spent, that people are watching very carefully. And so they're having to manage their inventory differently so that they can have a winning holiday season. When you look at what else is happening abroad, you have geopolitical concerns. It's so interesting to see oil at $81. the path of least resistance was really $100, wasn't it?
Well, not too long ago, that was that definitely seemed to be the picture that was forming. We haven't seen a real escalation, and markets seem to be sort of okay with what's happening right now in the Middle East. Obviously the humanitarian impacts are kind of unthinkable, but from just a purely a market perspective, right, we haven't seen that escalation, so markets seem to be pretty calm in terms of where kind of the current supply-demand dynamics are. And if you expect to see some slowing in the global economy, we continue to see weakness in China, right? So that keeps a lid on the demand side of things.
Do you feel that rates could come down now and that markets can move higher? There was sort of some chatter. I mean, on the other side of the coin, I heard one person calling that the possibility of 7% 10-year bond yields was possible. But, some of the language yesterday was that rates could come off the top and that could give a little leeway. Where do you think rates are normalized at this point?
Right, I think we're in that process, and I do think we had started to point out, kind of last week that we were starting to see, just from a technical perspective, we were starting to see some of the momentum indicators suggesting that kind of momentum was slowing, in bond yields, and we did kind of break a pretty key level to the downside, in yields, last night during the press conference.
Yeah.
And I do think we can kind of get into that period, at least in the short term here, where, the rate environment stabilizes, which in turn is going to be pretty positive for equity markets, and that there's a couple of things that are kind of lining up at the same time. We had just gotten sentiment and positioning had just gotten pretty negative. We started to see some capitulative type action last week at the lows, where we started to see the leadership really start to get hit, and areas of the market that have underperformed and had like bigger short bases were actually rallying while markets were moving lower. Right, we have the positive seasonal effects that we've talked about, with November and December being kind of very positive, historically from a seasonal perspective. And then you look at if the rate environment can just calm down, right, that we could see this kind of year-end rally.
Do you have certain sectors that you lean towards right now as far as equities? Some that you like more than others?
It's hard to kind of move away from what's worked at this point, right? And I think what we've seen, last week we saw the Russell, the mid-cap index, the equal weight index of the S&P 500 all making new year-to-date lows, right? So not even just like kind of pulling back like the benchmark S&P, they were making year-to-date lows. We're kind of retesting that area right now, right? Those areas of the economy, smaller cap companies, are being more heavily impacted by the higher interest rate environment. Right, so it's kind of a situation.
You don't like those.
I think if you have a longer term perspective, right? I think you can. These are kind of opportunistic.
There's an opportunity because
there's an opportunity like in the short term, but I don't like in the longer term. But in the short term, it's hard to see those companies kind of really outperforming, given the economic backdrop.
All right, Michael Ranking, Senior Market Strategist here at the New York Stock Exchange. Thank you so much.
Thanks for having me.
Plenty more to come here on Trading 360. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes through the technicals. Alan Nuckman takes us through the trades for Planet Fitness, Snap, and JD.com. Next, Trading 360 right here on Schwab Network.
See if we get a bounce in this channel. Whoa, never mind. A flush. Well, I was too slow to catch that. That was crazy. Just snapped. A little head and shoulders up here, but I didn't like it. Middle of the channel. Wasn't a good setup for me. Looking for a bounce here and maybe a retest. A little right shoulder. I picked up some there. Kind of a scale in potentially. Now we get a retest on the shoulder. Retest. Roku 30%, man. % on neg.
Years is 50 levels a super support level to lean on. So that's what I'm doing. I'm looking at a 50 call. I've got a lot of other indicators that have some upside momentum, that we made a bottom base. And if we get to that 64, which is one of the gaps up above, which is a modest move in this stock that's had such a big drop, if we get to the 64, that option gains 100%. So that's the way we like to play.
That's the way we like to play.
Right, understood. All right, next up, Snap. Alan, why did this one jump out at you today?
Well, it's been in a range, and it's been in a bottom-based range, and I also look for the same thing, that same bullish divergence we talked about in the S&P, whereas it's made new lows and not new highs in implied volatility. That's a sign that a bottom has tried to form. We've made a triple bottom on this stock that's traded between 8 and 14 for about a year, so the midpoint pivot on this is 11. Now, we've been between 8 and 11 now for the last 3 months, so a breakout of that range targets 14, which is the top of the action for the year. So there's a lot of positives here. here. I'm also seeing that leverage buying, that accumulation here. If you look at this stock since the 2017 launch, we're down at the base on this stock. So it's about risk reward as well here. I'm looking at the April option, the April
Maybe
$8
on the right
call.
shoulder
8
there.
is the bottom of this range here. It's trading for about 3. We're at 10.25, so it's $2.25 in the money. The expiration break even is 75 cents away. It's got 6 months of time and an 80 delta. I like this setup.
Okay, he likes the setup. What do you think? Do you like the way it's setting up, Ben?
Nicole, Alan, you had me at the pivot being $11. Everything after that, I just lost track of, because in this case, we're talking about a downtrend here. It's pretty well defined. Let me show you what's going on. Shares of SNAP coming off as of recent, and take a look here, because we're actually balancing as we have been and continue to be on this hourly chart. And in this instance, it's right around this $9.50 level. As long as we hold below 11, we're in a bit of a downtrend here. So you can see areas of consolidation that formed at lower and lower levels. It's going back to the beginning of July, and again, a lot more recently overlapping rotational than not, but still in a bit of a downtrend here. This is an hourly candle chart. Let's take a step back here. Let me show you exactly what's going on, because this is what Alan was talking about, the significance of this $11 level. If you go back to, well, we're talking April when we were around 786, we saw a nice rally up to near 14, but since, not a lot going on. So you've got a pretty well-defined upper, pretty well-defined lower extreme, and again, even right now, holding below that pivot, that $11 level that Alan mentioned here. Let me show you what's going on with a little bit of a bigger picture, longer-term chart here. And Alan, I'll agree with you in terms of Planet, PLNT, in terms of looking at that longer-term chart, but I was just trying to identify the more recent downtrend. In this instance, very much so the longer-term trend supportive of this bearish narrative as well. You can see here that we've been in this area of consolidation, Nicole, since the summer of last year, and again, as long as we hold below 14, we're below 11 right now, the pivot, but 14 is kind of the line in the sand at this point, still seeing value form at lower and lower levels here.
Okay. Thank you for that. And that's some chart when you're bouncing around down there at the bottom. Alan, final thoughts on Snap, and then we'll get to JD.com.
I think he kind of made my case for me. He says 11 is an extreme pivot. What I'm doing is I'm anticipating a move above that 11 based upon the other technicals I see, that bullish divergence and that money flow. And that move above 11 will be a confirmation. So you can get in now and anticipate the move with limited risk with an option, or if you're a breakout trader, you wait till it gets to 11 and then you jump on board, because if it gets above that 11, that's a very, very positive sign. We both agree on that.
Okay, at least you could agree on that part. And last but not least, when you look at JD.com, tell me about this one. Some people don't like to delve into things that relate to China at all. Why is this one a bullish one?
This is risk reward. I don't think I trade. This is risk reward. If you look at China, China is 20% off its high for the year. But it's also 20% off its low if you look at FXI, the ETF that tracks the big China stocks. The PE for that FXI is 10. So these stocks have become unwanted. They've had a big sell-off, a big pullback, let's say. And so looking at this sector, it looks like it's ripe, because I also see that bullish divergence where it made new lows, but not new highs, and implied volatility for this stock. JD has had a big drop. It had traded between 30 and 40 for 7 months. Then it broke down out of that range. Now we've been trading between 25 and 35 for 3 months. So what I'm looking here is risk reward. The 10-year low on this stock is 19.21. I'm looking at buying the $20 call. That $20 call for March is trading for about $6.50. It's $5.50 in the money. I see my bullish divergence. I see my leverage buying here on these lows, and a modest move up to 35. Just as the midpoint of the previous range. We tested and rejected this low. If it gets back to that 35 level, that option gains 100%.
Okay. Do you believe him? Is this a possibility, Ben?
I see a downtrend here still, Nicole. I think 34, 35 is a key area right now, but as long as we're below 30 in this instance, we're still in a downtrend in multiple time frames. Let's dive into first the most granular that I looked at. In this instance, the move lower from 42 all the way down to the recent lows around 24. We're looking at hourly candle charts, and this goes all the way back to the beginning of August. You can see areas of consolidation that formed at lower and lower levels, currently bouncing around 25, it looks like. So that's why I say as long as we're below 30, it appears as if that working assumption that value is forming at lower and lower levels is still a valid one, and those that are looking to participate with the trend are looking for short side opportunities, not necessarily longs in this instance. So again, as we move away from this trend to the downside on the hourly candle chart, I want to show you what's going on here because similar pattern playing as I pull up a daily candle chart, and this goes all the way back to the beginning of the year. Areas of consolidation that formed at lower and lower levels with limited rejection in this instance. You can see again, significance associated with 25, 30, anything above that would kind of bring this bearish narrative into question. But under these circumstances, no rejection of these lower levels as of yet. Taking a look here, I've got one more time frame because I want to show you what's going on here. We always talk about these phases of development, right? In this instance, a little bit more overlapping and rotational than we'd look for. Not a lot of really well-defined vertical separation between these consolidation areas. But as you can see right now, we're in a bit of a breakout phase to the downside here, Nicole. We're in a vertical phase as we take out those lows from last fall. Looks like the market's trying to seek value lower. We're going to wait and see at what point do we get, again, a new area of consolidation, that kind of chop forming around a new area lower. That's what the bears are looking for here. Continuation of the existing pattern. That's been down.
All right, thank you for that. This is a good one, you guys. Really, thank you. Alan, any final thoughts?
Well, in this case, I'm looking at a stock that I have the ability to be long from essentially 10-year lows. It's way oversold, just as the market was. And as the market had bullish divergence, that's what this stock has too. Whereas a sentiment sign, the scariness on the downside has alleviated, and you see lower volatility. Volatility in this stock is half of what it was at one time this year. So it's just like what we see in volatility here for the overall market. The VIX is what, at 15 now? 15. We were just at 23. The VIX has dropped 30% in just the last week or so, and that's a very positive sign. And that's what you look for, is that shift in sentiment, and that's what happened in the overall market. That's what I'm looking for to happen in these China stocks as well.
All right, thank you both very much. Alan Nuckman, bullseyeoption.com, and our own Ben Lichtenstein on those charts. Thank you. Coming up, we're going to spotlight some of the trends that we are seeing in athleisure ahead of the holiday shopping season with the former president of Under Armour's North America division.
I'm going to take some profits on this channel here. We get there, which also would be VWAP. I was weird what happened at 11:15. Beyond's up 15.3. Yep, risk on. Don't want to see it just trade sideways. Still finds this the bottom of this channel to sell off to it. Could get stuck in that. If it is still bullish, that is.
Moment. Thank you so much for being with us. You were at Under Armour. You were there from 2013 to 2019. Is that right? So,
that's right.
And you were in that executive role. At this point now, I'd love to get some takeaways. Not what you learned at Under Armour, but some trends that you see then and now. I mean, what are you seeing? Are you seeing changes?
Well, I mean, the athleisure trend started probably in the 2009, 2010 time
Saw a
frame,
couple
and I
there.
don't think we've seen it stop, but obviously a little bit, a little bit slower, a little bit faster at certain times. And I think right now is one of those times where it's slowing down just a little bit, after a really strong 21 and a start to 22. So interesting to see how supply and demand match up this holiday.
I mean, of course, during COVID, athleisure was definitely it. And for a while, Lulus were accepted at work. I say Lulus, I shouldn't say that. I mean, any sort of athleisure look. But I think people are dressing up more now, generally. How do you feel the shopper is? And when you look at what the shopper has been doing, because, they were spending and then now they have these high interest rate credit cards, or are they digging into their savings? Are you seeing any trends there on consumer behavior?
Well, I mean, I still look at a lot of that information, and I mean, credit card data would suggest that category spending is pretty flat right now, year over year. So, from that perspective, I think we should be a little worried. Consumer sentiment is a little bit soft. And so I think as we head into the holiday, we should expect more and more deals. I think the supply chain loosened up. A lot of brands are making a lot of goods. The demand isn't quite there, and so we're seeing maybe some earlier sales than we've ever seen before.
Yeah, and I want to get to your the post, but just finally, when you think about marketing and how just your takeaways as a marketing and a business executive and president there of North America at Under Armour, what would be your advice to a younger person who is coming up and trying to run a company? It's a difficult environment. And it only gets more and more difficult, with social media and a lot of more social awareness and things like that. Maybe things that we didn't think about as much 10, 20 years ago.
Yeah, well, I think, what's really changed over the 20 years is the barriers to entry for a brand, especially in this space, are lower than ever before, with contract manufacturing, the ability to stand up direct to consumer and use influencers and social media to drive traffic. So I think those things have made entry into the market really possible, but getting it from startup to 10, 20, 30, 40 million, it just takes a lot of stick-to-itiveness. And so, really knowing who your brand is and then making sure you're aligned with the right channel partners to be successful, those are really important decisions early on.
All right, so that's good to know. Do you still love Under Armour?
I do love Under Armour. I love the space. I love the sports space in general, but I'm thankful to not be worried about, how much unit volume we do at Holiday Q4 this year.
It's a lot of pressure. Let's turn to the Post, which is a networking club that you are co-founder. Tell me a little bit how it came about.
Yeah, so my co-founder is Christian Ponder. Christian was an NFL quarterback, lives here in New York, wrapped up his career in 2016. I was a failed walk-on baseball player, so not quite the soccer player that you were, but we got together, and it was really, he was looking for his tribe in life after sport. And when he couldn't find that club, he called me up and said, I think we need to build it. And so now here we are with 300 members and 1,500 people on the wait list to join this great network of athletes doing great things in life after sport.
So you have a main hub here in New York City, right? Tell me about that.
Yeah, so we have our first clubhouse that's open in Flatiron over on 23rd Street. So that's a place where our members come to co-work or host a meeting.
Broke the top of that channel, but we'll see if it just chopped around up here for a bit.
Let me just grab this for you.
We lost a little,
it's all right.
Little mic.
You can hold it or just clip it on. So tell me a little bit about the Post and the hub that you've developed in the Flatiron.
Yeah, so that first clubhouse is on 23rd Street between 5th and 6th. Beautiful space, 8,000 square feet. And our members use it for a host of things. We host big networking events and workshops there, but also they use it for co-working and meetings, hosting clients. Sometimes, like tonight, it'll be a place where people are just having a couple of drinks watching Thursday Night Football,
Right.
all of those things, but it just gives us a central hub.
And then tell me about the business aspect. Do you find that people talk about business, they come up with business ideas, they see a rising rate environment? I mean, do they give advice about investing? Do you find that people talk, I mean, you're a business expert, you ran a huge company. Do you find that they ask you for advice? Do you find a lot of conversations like that?
Absolutely. The members are not there to tell stories about the goals we scored or the home runs we hit, right?
Yeah.
They're there to talk about how we're taking the things we learned in sport to be great in business. And that usually means members are doing deals together, they're starting businesses together, they're finding other people who could sit on their boards or people they should hire. So those are the kinds of conversations happen as opposed to part of that.
Yeah, and I thought your stat about women in the C-suite, I mean, just tell me a little bit about former college athletes and their transition into success in business.
Yeah, so we have 5.5 million former collegiate and professional athletes in this country. Right now, 52% of the women in the C-suite in this country
Might have just been a bull flag up here. We'll see.
or above. So those things that we learned
I didn't
on
close
the
on this
field or
break.
in the pool or in the court, whatever it was,
Maybe should have.
those things, they matter in running a company. I saw it at Under
see.
Armour. I'm sure you
See
see
if
it
we
in
double
your,
top.
in your life, and we see it with the athletes that we're supporting now. So they're really applying those lessons into building teams and setting goals and doing great things.
All right, that never give up attitude, right? You just got to get there, you got to win. Jason, it's great to see you, and we'll be watching for updates from the Post. Keep us abreast of that. Great to see you. Thank you so much.
Thanks for
Jason
having me.
LaRose, co-founder of the Post. Coming up next, we'll take a look at Elf Beauty. The stock has been on the move, had its latest earnings report. It's been a real winner, but let's find out the very latest. The CFO of the company will be joining us. And as we head to break, you'll take a look at some winners and losers in the S&P 500.
At EU close, let's see. EU closes here. Look at that VWAP. How strange, it's melting, like stair stepping down. Maybe a double top there. I've got a pretty large position already, so I'm not going to add. If I could. I'll leave it. I added, so I bought in some here, added a little bit here. It's down, of course. I could add more, it's down 20%, but it's okay. If this does hold for a double top, that's better, because this head and shoulders was kind of weak. Usually we'll just go up and then just roll over and then just go down. Needs to do this. Needs to fight, kick and scream a little bit. There's a space launch? Gotta watch that. I mean, the cool play on space will be the puts. Not cool, but the profitable one for if one blows up. I don't think we're gonna get like any sort of upside on it anymore as far as from a launch. Oh, it's going right now.
It does another loop before that drop. So we're going to keep our eyes on the vehicle at this point and just hope we could see a drop here soon.
Drop?
And a reminder for those just tuning in, this is the Virgin Galactic 05 mission, which is a research flight with Dr. Alan Stern and Kelly
It's up
Girardi
10, but the whole market's
performing research
risk on
on
right now,
board,
so
in addition to a third private astronaut and a crew trainer that are all on board, set to fly to the edge of space aboard the VSS Unity, which is currently mounted underneath that mothership plane there, known as VMS Eve.
I'm actually not sure that I knew this. I just saw on the Wikipedia page that it was Stephen Hawking who chose the name for VSS Unity, which I think is really cool.
They've had quite a few launches. I don't know. We haven't watched them.
Not,
haven't heard
not
about
to
them.
interrupt, dudes, but we're seeing a
Stock.
high climb rate
Oh,
here
there it
from
is.
the mothership.
Here we go. We have drop.
That's pretty cool.
There it goes.
We haven't seen this part
that
yet.
looks like the engine firing. Yep.
Dude, can you imagine?
Engine is on. Look at that.
This
There it
stock
goes.
would almost immediately get halted.
That thing is speeding away super fast at this point.
Fly, baby, fly.
I'm gonna have the option stream open
Godspeed to the crew.
all about the money puts. If it
Alan,
does.
Kelly, have some fun up there. Oh yeah, and do research.
Yeah, that part. That too.
Oh, this is absolutely exciting. So again, this is the main powered portion of the flight. So Trevor, what's happening?
Yeah, so right now the spacecraft is in its roughly 42-second long burn, which will take it up to an apogee of approximately 88 kilometers and a speed of
It's an explosion. I'm hitting the send on these
roughly
puts.
Mach 3, as they would
500
say.
weeklies at $1.50.
Oh, and it looks like that is shut down.
Yep, there's engine cutoff.
Is that bad?
As expected.
Okay. Yeah, so now it will just coast up to its apogee, and soon we can expect it to start entering the feathered configuration that we have been talking about.
It's a great
Yes.
track here.
So it will kind of move the entire spacecraft essentially around the wings, or vice versa.
Yeah, it is correct. I just want to shout out, I believe that tracking was done by Gage, so Gage is in the background. Thank you,
We need a
Gage.
different stream of it where it's showing like inside.
Yep, and at this point, I believe they will be starting to experience
They're
their
weightless, yeah,
weightlessness and be able to
for sure.
unstrap from their seats and start performing their experiments. Which, again, for those unaware, some of those experiments that they are conducting are biomonitors that they've been wearing. There is an active glucose monitor that Kelly Girardi has been wearing for a couple of days to compare now after the space flight. There is also imagery with a sort of UV camera that Dr. Stern will be testing out there as well to see how it compares to
experiments that were flown aboard the space shuttle. And all of this in the 3 to 5 minute span that they have up there currently flying in that weightless spaceflight environment. This is unbelievable. And again, you're looking from the ground here at a vehicle that is currently at the edge of space right now.
The stock
That
might sell off actually once it
still
lands.
blows my mind there too.
Maybe not
It's
dramatically,
pretty
but
impressive.
could.
You know, with all the orbital flights, we tend
Probably
to
not worth weeklies, but
not put a lot of thought into these suborbital flights, but it still is one heck of a flight regime here. There's not a lot of things that can do what that thing is doing.
Exactly. And you can actually kind of see the reflection there. It's almost as if that feathering is ongoing and you're kind of seeing the glint off of the sun. I can't confirm that, but
you fireball and hit
it
and
definitely
send.
looks like the glint indicates that everything has gone well so far with the feathering and that they will start coming back to land once again at Spaceport America in New Mexico. The other interesting thing to keep in mind is that this vehicle is quite light, which can mean a little bit of wobble on its way back down. As we've seen on past missions, the spacecraft may shake a little bit, but is totally expected on its way back down to Earth from space. And yeah, the barometric altitude is currently 0 because there's not really any atmospheric pressure to measure.
Yeah, on the flight tracker, it just it says 62,000 feet, and then that's it. And it's just like, I don't really know what to do with this.
Yeah. And again, there is not really an atmosphere to measure up there, so there's kind of that too. So at this point now, Trevor, where should we be about in the flight?
Yeah, so I believe at this point we are likely still in the weightlessness phase, coming up on the end of that.
Is that New Mexico?
So this is when the re-entry
Looks
will
like it.
start. And so
Fast
they'll come in
emptiness.
in the feathered config, which is like the big wing up vertical, to slow down a little bit, and then they will enter the glide.
Oh, I see Nevada.
So it's
Mexico's not
kind
that
of
big.
hard exactly to know exactly
Or
where
that
we
big.
are, whether it's in glide or re-entry yet, but hopefully we'll get some
They've
visual
had
clues.
quite a few
sooner
flights since the
than
last one
later
we watched, I
to,
think.
Understand that.
But it is interesting. It does look like the stock is
Exactly.
reacting.
So we are keeping an eye on that.
This might be
We're
irrelevant,
also
honestly.
keeping an eye
It's such a
from
risk on
Virgin
day.
Galactic to see if they have any additional updates.
This thing sold
other
off so
than
much.
confirming that they are on board and flying here.
Yeah, and it's worth reiterating, there are no onboard views provided for this flight, unfortunately.
But we thankfully have our cameras out there. We have this live view, which Gage is tracking it. And I know
Good luck
Jack
your
is
focus
out
on
there as
manual.
well. I'm sure we'll be able to get his footage after the flight 2 here.
Looks like we're getting baro altitude coming back.
Yep, it appears that it is on its way back down now. So far, so good. This is exactly what we expect from this. And again, its next stop after this is right back on the exact same runway that it took off from, except this time instead of being mounted underneath the VMS Eve, it will now be under its own power coming back down. And look at that view. You can see the feathers there, those two little pointy things up. That's the feathered portion of the wing.
Yeah, and it looks like we are now in the normal position again, where we're gliding.
Yes, now around 35,000 feet is the reading that we are getting from the ADS-B information on board. Look at that. On board there, you've got 3 new space flyers. Dr. Alan Stern, Carrie Girardi, and a third unnamed astronaut 022. So this is exciting. And what exactly is kind of like the landing profile for this? It's not going straight in, right?
These puts are
it circles around. I
Gone
mean,
up
this
in value a
thing,
little bit.
it's not like the shuttle that it's going to fall out of the sky, right? It'll fly. This thing flies much more like an aircraft than it would a brick with some wings attached to it. So they will circle around and land. It's definitely not the descent trajectory that's kind of in line with a shuttle coming down at like Mach 25.
All right, it's bye. Let's get a little fleshy here.
Yeah, they'll circle around for the runway. They'll do a heading alignment on the runway and basically just glide the thing right in. Altitude is the best insurance, right? So use the altitude to get yourself aligned and then drop that thing right down. But once again, the landing would be more like an aircraft, less like the shuttle.
Right.
Yeah, I
And if
mean
I
it's
recall,
just like aircraft, it's all energy management. So when they're coming in, they have plenty of energy. So they do end up circling around the spaceport a couple times to burn some of that off and then line up for the runway. But I mean, it's quite a vehicle. Suffice to say, when Dawson and I checked out the simulator, I think that was back for Galactic 01. Maybe I'll just save. You guys will have to see that footage when we publish it. But there is a lot of excess energy that they do not use. They just burn off. But if they did use it, oh boy, I'll just say that.
that's a good way to put it. And the runway there, like you said, altitude's your best friend here. You also have an extra long runway, which helps.
Should have little
The
windmills on
runway
the plane
is
when it
about
comes down.
12,000 feet
Capture
in
some of that
length,
energy
which is
back.
about 3,700
I think you
meters or
just
so. in
dive
length.
bomb into the runway.
You've got that extra distance to help as well.
Increase the drag.
So, Jack, while we have you here, I know you were dealing with some slight technical issues, but what'd that drop look like to you?
I'm just still thinking because you said going the distance, so now I have cake stuck in my head. They're going the distance. They're going the speed. It was great. A beautiful day for a drop. Absolutely no clouds. I wish my feed had been live, but is what it is. Sometimes you have little technical bugbears pop up. But I do have the footage, and I will be posting that. So do not fret. But holy cow, like you said, Sawyer, we have what would you say? 3 more or 2 more space flyers? Like
3 more space
a
flyers.
good day.
Yep.
A good day to go to space. That's what I'll say. It's a fantastic day to go to space.
3 more
And
space flyers?
a few moments ago, I heard the sonic booms. So any day you see a rocket fly into space, good day. Any day you see people fly into space, even better day. And any day you get both of those plus sonic booms, I mean, what more do you want?
Well, air traffic.
Doesn't get much better than
Are
that.
there 3 more going today?
I do want to point out we do have our first image from Virgin Galactic, basically saying that the vehicle had released, everything went successful with the ignition. So confirmation from them that so far everything right on track, right on the money.
Could have been a lot more patient on those put entries, huh?
And as mentioned, it will now be
this liquidity.
sort of doing its final loop around back here to make its way back to Spaceport America. EJ, what's going through your mind right now here? Because I know I'm jittery with excitement still.
I'm watching the track. I tend to nerd out with this stuff. I'm watching the track. I'm watching the altitude on the tracker that you guys see on the screen there. Looking at the barometric altitude, which it's altitude correlated from pressure, from barometric pressure. It's about 15,000, and I mean, obviously it's coming back down because it doesn't have propulsion on it. The propulsion was spent already. So I'm just sitting here watching. It looks like the chase plane met up with the vehicle, met up with the spacecraft there, and they'll basically be flying in formation all the way down. Not landing with it, though.
No, flying right along the side of the runway, though, typically.
Yep.
So that is making that turn there. Trevor, what about you?
Like you guys said, it's always an awesome day when we see these happen, whether it's people on New Shepard or Virgin Galactic or people go into orbit. It's always a cool feeling.
That is true. So far, so good. Looks like it's about 11,000 feet in altitude. And again, that's the barometric altitude, which is related to air pressure. So that's why it was kind of 0 when it was in space with the whole lack of barometric pressure. And you can see the ground speed there is about 200 knots. And already now down to about 10,000 feet. So at this point on board, it's basically going to feel like a normal airplane flight, right?
Mm-hmm. I mean, you know, like an A320 or a 737 when they're on approach, when you're descending down, the engines are on obviously, but you're just using gravity pushing down on the plane to stay flying, right? Like the gravity pushing down on the plane with a forward velocity is going to generate lift, and the lower you are, the closer you are to the ground, the less potential energy, more kinetic energy, right? Like you can basically just use that to keep going all the way back to the runway. I mean, you can't stay up there forever, but I mean, that would be nice.
I know this is something that the FAA is working on, where right now when you're descending from like a flight level, let's just say like 40,000 feet or whatever, to the runway, you kind of go in stages where you may be lowered to like 18,000 feet and then slowly lowered in steps until you're on the glide slope. And they're working on giving people approval to go straight from their cruise altitude at 40,000 feet or whatever, and glide slope from there for a continuous descent onto the runway, because that would make some flights quite a bit more efficient, since you don't have to constantly do this throttling and flying at lower altitudes.
Right, and in this case, VSS Unity kind of really doesn't have that option of,
Yeah.
holding at a certain altitude here. It's kind of just on its way down, and it's gonna land. So far, everything looking good. We are working on getting tracking back up for the landing itself, so don't worry about that. We're doing our best to try and get that back to you as we take a look there at Spaceport America, in fact. So that is where the spacecraft is set to return. A beautiful, gorgeous day in the deserts of New Mexico. Let's see. So far, again, everything continuing well. Latest update from Virgin themselves was that the crew did get to experience their weightless time and officially welcoming to space their astronauts, Virgin astronauts 020, 021, and 022.
I might be closing somebody's here. I don't like how it...
And we have confirmation
this is
that the plane has now landed safely. The VSS
see
Unity
what happens
is
at,
back on Earth,
channel.
along with its crew
Either
members.
find this for support and
safely.
keep rallying, or
Another
rush
mission
through it.
in the books. Galactic 05, welcome home.
Excellent mission. Excellent mission. Looked pretty textbook from what we could tell.
Yeah, we are slowly getting images in from Virgin Galactic of the flight portion itself. We'll see if maybe we can get some of those up on the screen and get some replays going for you here. We are working on getting the visual on that, so stay tuned. I promise we have more coming. We will have video of it, we'll have visuals, and we're finally getting images of the flight itself. So hang tight, folks. While we do have a second, though, I do want to just thank people who were supporting during the
20%
flight.
on Beyond.
Sinky Pickle, thank you very much. 15-month Red
This was
Team
the
member
crowded
milestone.
short, according to
Jim
S3
Cabot,
Partners.
thank you for gifting 2 separate Red Team memberships here. So thank you very much for that.
On a risk-on day, you're going to
And
have a
again,
lot of shorts
the
closing.
time from actually taking off on the runway to landing back on the runway, approximately 1 hour, just under 1 hour, taking off at exactly 9 a.m. Mountain Time. That's 11 a.m. Eastern. That is absolutely beautiful, and we'll try and get some live views from the ground as well here. Technology.
Really just can't underscore enough that it's remarkable that they have been able, they being Virgin, to up their cadence. You know, they had that 1.5, 2 year stand down period where they upgraded the mothership and they upgraded Unity, and it shows. This is the 6th flight in 6 months. That's remarkable. It's the exact cadence that we wanted to see from Virgin this whole time, and I hope that they can keep it up and that this becomes a monthly thing, and that when we get the Delta class of vehicles, it can be even more rapid, and it's just fantastic. My most heartfelt congratulations to everybody, not just the new astronauts, but also everybody at Virgin whose hard work really paid off with this seriously impressive cadence.
Absolutely, yes. Congratulations to all the teams that worked as
Closed
we
a couple
see
more there.
VSS Unity back at Spaceport America there on screen. This is a live view of it. And yes, shout out to not only the people on board, there's whole teams of researchers working behind the scenes on this particular mission. There was also, as you mentioned, the people working with Virgin Galactic, trying to get all of the technological things settled out, make sure the crew is safe and trained, and get them up and get them home. So it's always exciting here. So the crew inside there, you can see the first vehicles are now coming out to the spacecraft as we get ready to get the crew out and get them reunited with their families.
So first part of egress operations here, if I'm remembering correctly, is to get the tow bar on the vehicle and then egress the crew out the hatch here. You notice that first vehicle, that first car that was towing was towing something. What they're going to do is, because the front of the vehicle has a skid on it, they basically got to put the tow bar on it, get the skid up off the ground, and set the thing on the tow bar so they can tow it back to the hangar, which is on the left side of your screen, far left side of the screen right now.
I can't see the feed right now, but EJ, does it have the air data boom on the front of Unity still?
Yeah, they have to remove that as well so they can get the tow bar
Exactly.
on. Yep.
Exactly.
Yep.
There you go. And it's almost kind of like, again, during the
At this
shuttle
point,
approach.
maybe
Thanks,
that's
guys.
some
Good call.
resistance. But yeah, risk on mode here for about 3 weeks at this point. So maybe that's some resistance. But yeah, risk on mode here today. And it's probably on the back of some of these earnings too, because we've got a lot
That
to
will
talk
be
about,
an opportunity
in a little
maybe at
bit
some
here,
point.
Nathan, but I wanted to focus here on Starbucks,
something doesn't go to
which is
plan.
spiking post
Grabbing
earnings,
some weekly
maybe
puts.
a bit of a relief rally here.
Doesn't
Let's
have
bring
to
in
necessarily
Jenny
be
Horn,
catastrophic,
markets
but
correspondent here on the network. Jenny, this stock is caffeinated today.
good to watch those.
Moonshot to the upside. I mean, you haven't seen a move like this in Starbucks in a long time, but the results are pretty good.
Yeah, I mean, best day in almost 2 years. So to speak to that, we don't really see moves like this in Starbucks very often, and this is now putting on a pace.
Yeah, see, space hasn't even changed since it's landed and stuff. If it was a rally based on its flight, it would have probably sold off by now.
Really strong
like I said, they've done it once a month, so they're not going to get a reaction anymore unless it's a bad one or something bad going on.
Consumers have followed this trend where they're willing to pay more premium prices for some of their various specific drink orders that are getting rather costly. Anyone who's ever ordered Starbucks, which I could safely assume is pretty much anyone in the United States, knows once you start customizing, I mean, that's really how you get offhand with some of the prices. I think that my drink, if I really order it the way I want it, is like upwards of $7. That's insane, but they literally said that that is something that they're seeing actually benefit their top line growth because consumers are willing to pay. It's like Starbucks has become almost synonymous with a consumer staple at this point. This is not where they're willing to trade down, and that's amazing. And I think signaling this 10% move higher today. Their average ticket size in North America rose 6%, while being up around 5% internationally. The CEO said again they're not seeing any drop in demand given the current environment, saying they're not really seeing a change in sentiment in their overall customer base at this time. Noting, though, that the company is in much different shape than it was back in 2008, which is a year that some analysts were sort of warning about and making the comparison to, saying they see a much more diversified set of channels they now participate in. The company did outline this $3 billion savings program, as well as this way that they're sort of reshaping a lot of their stores. They're making their stores more efficient. They're adding in more drive-thrus. They're also making it easier for their baristas.
We did it. We made it all the way over here, just sideways.
Very, very,
articulate,
very, very specific orders.
We can break it now, but
they're trying to make that more, simplified as far as operations go. So it seems like it's paying off. I mean, as far as shutting down some of these non-profitable locations, opening new stores,
closed a couple
they do
more.
expect now by the end of this year to have something of around 41,000 stores globally, which is absolutely
if we
massive.
break here,
I'm sure no surprise to either of you because it feels like at least in Chicago,
we'll have a
there's
big majority. I'm just
Starbucks
closing
on every,
literally 2 at a time.
corner for me, so not a surprise surprised to see around 41,000 stores, but amazing to see actually
could
their
very well
loyalty
be
program, which is up
bull flag.
14%. That has been a consistent bright spot that
Now
analysts
where's the
have
view
noted
up at
because
this
it's like
stair
you
step?
enter cash into this app and then you just
There you
leave it
go.
and then you feel obligated
Do
to
it.
spend it, and somehow it never feels like I have enough. I'm always like a few cents short, so then I reload it, and it's like this constant balance that just keeps accruing. But it's brilliant for them, and it's been something that's been working out very well. But overall sentiment on their earnings call from their CFO as well as CEO was so optimistic. That is to me what's driving up this 10% move higher today. Anytime you can be optimistic on now in the back half of this year, seems like the stock gets rewarded.
Yeah, Jenny, you know, if I go back yesterday, the options market was pricing in basically a $5 move in the stock, and it's double that today, which kind of tells you just basically how investors receive this report. I looked through it. It looks pretty good to me. But let's say this. If I'm a bear or if I'm a half-full investor, were there any flies in the ointment here? Anything that you can point to which might be a concern for the company, or was it just good across the board? Because I thought this was discretionary, and I thought we had some economic growth concerns.
You know, I think that's a really good point. I would say the fly in the ointment was, to me, everything that's led up until this report, because this is a name that's been consistently lagging. We see shares up 10% today, but still it's down. It's up only 2% for the year. I mean, we were down around 11% into yesterday's close. So they've been underperforming all year long. Make no mistake about it, they have operational challenges that they do still need to deal with. And the rising prices, I do think right now it seems like it's all working, because I mean, obviously they're not seeing any demand wane, but how much longer are consumers going to be willing to pay $8 for a cup of Starbucks? I mean, I find it ridiculous. I am not a coffee drinker myself, so that to me sounds outlandish, but they cannot continue on this way, or else I think that eventually you'll have those people that say, wait a second, I mean, I'm paying $8, $9 for a cup of coffee. That's insane. At least that's my own take. I mean, China sales were actually stronger than expected. I would have said that could have been a potential weak spot, but I mean, they're up around 13% on a year-over-year basis. That is definitely upside. I just think that how much longer will the consumer be resilient to some of these price increases? Because again, it has to stop somewhere.
Oh, it's stopping, Jenny. My theory of what I do here in the office, I buy, you fly to go get it for us. That's done with. You keep buying $8 coffees because inflation's hitting hard, and that's ridiculous.
You know, you feel less of the burn when it's not your money.
That's true. Of course, you're happy to go walk and get my coffee. That's great. All right. Thanks to Jenny Horn, markets correspondent here on the network, breaking down that massive pop here in Starbucks, amongst others. And we'll get to a couple of those other names in a minute, Nathan. But I wanted to get your takeaway from the Fed meeting, Fed Chair Powell's commentary yesterday. And it seems like the market just pivoted, right? They immediately said, oh, rate cuts by June of next year. He even stated in his Q&A session that they haven't even talked about cutting rates yet. Job market's really robust. Wages are still going up. The economy's humming along with the GDP reading above 4% last week, Nathan. The market is that spoiled, petulant child that thinks they're going to get those rate cuts next year. And I think the only way that happens in June is if something breaks. And right now, nothing's breaking, Nathan.
Oh, I'd agree. Yeah. Why? I mean, why waste the ammunition if it's not there? You're not just going to take it down because you feel like you went too fast on the way up. It's all about the sustainability of having this restrictive policy in place and what the impact potentially it has on the economy. Maybe the economy can hang in there with a 5.25 Fed funds rate. So we'll see. But, you know, Tom, let's say they are done. Let's say that the bond market is right, or those probability
So it did break the channel.
tools are accurate. Well, we still have
That's been
basically
just
the runoff of the
chopping
balance
around up
sheet.
here, though.
We still have the Treasury funding that needs to occur, which is above average. So that issuance is still part of the reason and might be one of the primary
Solid
drivers
support
of
there.
why we've seen this lift in those longer-term yields since
Let's see.
August,
Got this
basically.
one.
So that's
Deleted
a
this
question
one if you
mark.
left it.
And then, of course, even if they're done, even if inflation is cooperating, we still need to see are the rates basically this restrictive policy where they currently stand right now. At what point is that fully baked into the economy? That might not be until Q2 of next year. So we'll have to wait and see on that. And if you look at some of these guidances from some of the corporations that we've seen out there, there's pockets where we're seeing evidence of weakness. It's definitely not across the board. This is a stock picker's market, but look at something like an Estee Lauder, look at Paycom Software and what happened there. There's been guidance in terms of some of the airlines. I know we're going to get to Expedia later in terms of softening of demand there. So look at the solar companies, SolarEdge and Enphase, massive misses on some of those numbers in terms of guidance, citing basically that they got blindsided or just the demand completely dropped off a map. I know there's weakness in Europe. There's been weakness in China. So putting all this together that's great if you want to get on the long side because you believe the Fed is done, but don't think you're out of the woods. We still need to make sure that we are being respectful of the policy that's currently in place.
Yeah, we might have a government shutdown here in a couple weeks here.
Oh, man.
Also, Nathan, I mean, there's a bunch of headwinds, geopolitical risks out there. But on the flip side, let's talk about a couple earnings reports because I'm looking at Roku up 30%, DoorDash up 16, 17%. I mean, these were actually pretty good reports. Now, those stocks were down going into these results, so the bar was really low going into these results, but those are definitely bonuses when you see pops like that, maybe some short covering also.
Yeah, I think so too. I was looking through some of those on Roku. I think they're raising prices. That's being well received, and the results, of course, not as bad as feared. I saw some analysts were citing that they expected basically ad spend to be weak for Roku. That didn't turn out to be the case. You look at something like DoorDash, it looks like they're executing well. People are still willing to spend to have people fly for them, as you say, Tom. And if you look at something like a Shopify, I think what's really benefiting them there is AI. They're attributing a lot of the growth that they have there to AI, because you would think if that there's going to be a slowdown, that it would be showing up in Shopify's numbers. And looking back on this week versus the big mega cap tech reports that we've got, AMD raised their guidance on their AI chip there. You look at Super Microcomputer had really good results, solid results. They take in servers, NVIDIA chips into their servers. So you have benefit. What I'm seeing here in terms of a theme is some validation, some more validation outside of NVIDIA from the whole secular growth of the potential for AI. I think that's what's also giving us that lift within technology this week.
Yeah, if we can get a chart, if there's Supermicro that you mentioned getting a little bit of a pop there, or actually down today.
They're down, but the earnings report was there. They were up earlier. They are taking profits on it, but the results and the guidance were solid.
Yeah, and then in that, that theme of AI, you look at a company like Palantir, which had been beaten down over the last several weeks, but still having a really good day today. And I think, Nathan, when you talk about efficiencies and the monetization of AI, I think that's going to be real important over the next 6 to 12 months because everybody's on the AI bandwagon, but only a certain amount of companies are going to be able to monetize it the way that they want. But it creates efficiencies, right? And that's what companies are looking at this point right now because they're cutting staff. Shopify is a perfect example. They're cutting staff. They're using AI to kind of make their business more robust, more efficient at this point. Is that the caveat where, hey, these companies that are in this tech space especially, but then you've got Shopify in the retail space, Walmart's using AI in their supply chain at this point. So it's going to be the monetization moving forward, right?
Yes, it is. And on the productivity side, that can be a nice kind of boon to, solving this tight labor market problem. So that holistically speaking, that can be a good thing. And then, the question was, everybody kind of, NVIDIA comes out, they deliver, they're the pick and shovels. And so they're basically saying, look, the AI demand is real. They proved it in the results and their guidance. Outside of that, everybody was wondering, okay, well, what's the use case for delivering the incremental dollar? Yeah, the potential is there, but can you monetize it like you're saying? You look at companies like Adobe, like GitLab, like Shopify. These companies are basically showing you that the use case is translating into the bottom line. And how can you do that? Well, the AI tools or software suite, whatever you're offering in whatever format, this is a very broad topic, it's successful if the end user can also save money by utilizing it. They'll pay $30 if it's going to make them 60 net on the bottom. So it's a win-win in that type of environment. We're beginning to see more incremental evidence that these companies are able to monetize AI. So that's providing the secular growth model, even if there are overall global economic growth concerns.
Yeah, definitely. Real quick here, Nathan, before we take a quick break, we're going to get into a discussion about Apple ahead of their earnings. You look at the S&P 500, you mentioned it broke through to the upside on its 200-day moving average at this point. Are there any levels that you're looking at that might be resistance at this point?
Well, you can. It's really coming up towards one of those resistance levels right now. So 43.50 is kind of nice because this was, it fits nicely at the 50 SMA, simple moving average. And this is also 43.50 is where the index bounced in both June and in August. This level is roughly in line with a downward sloping trajectory, the top of basically this channel that you look since August. When you get to 43.50, it's basically at the top of that channel, which if you can break it and get above it and then consolidate some, that would be a bullish indicator. But right now, Tom, you have to admit from basically a 4-month basis, we're still in a downtrend, so we have some work to do.
Definitely. If you look at those highs that we saw in July, 46.07, we have been on that downslope. We're starting to get to the upper edge of it to the upside. So, momentum to the upside here this week, but we'll see if it holds.
All right, Spy, see if you're
All right,
ready.
Nathan, let's take a quick break. When we come
12:15.
back, we're going to discuss Apple.
I need to do tomorrow's contracts, but
3 straight
any more
quarters of
today.
revenue declines. I put a question out there on Twitter. You should check it out. Would any other company benefit from declining revenues? With Apple up about 36% so far this year, would any other company be able to do that?
You have Apple after hours too, so I definitely could have some after hours exposure. Don't want to be trying to hold stuff to after hours though. It's usually when I'm hot in it, waiting for the reversal. Dang, the only trade today might have been this one breakout that I opened and then closed. We'll see if this one plays out. Fortunately, it's getting so close to VWAP, and if that's the whole move, that's quite small now. Just theta burning. it's dancing around.
Because of the law of large numbers? Well, it's been one of two ways. Go into other growth avenues like services, for example, or wearables like Apple's been doing, or let's see what happens within their headset division. Maybe that does something for them. The other means have been using their cash hoard to buy back stock and lower and increase their EPS as a result of that. But if they're not getting the revenue growth and they're not able to successfully go out into those growth channels, then you don't want them just spending cash to boost their EPS inorganically. It's not a very healthy way, so to speak, because the question becomes how sustainable is that? You've got a forward PE of about 28 on the stock, but like I said, investors, it's probably the most trusted stock in the sense that they feel like every time that it goes down, this is where the money tends to go. If there's recessionary concerns, this is where the money tends to go. So it's just labeled as the classic perceived safe haven play for your investment dollar.
Yeah, expectations about iPhone 15 sales have been pretty robust. They see some headwinds in China. Huawei came out with their new phone that's competing with Apple over there. You know, the government likes them buying their own products. But at the same time, Nathan, the recycle of your iPhone, if you have one, that seems to be tending to get longer, so you don't need to refresh your model as much as you did previously. That's been denting some of that revenue growth. But, I mean, you can't push back against a company that has this ecosystem that you really can't or maybe don't want to get out of at this point, right?
Well, it's always at what price, right? I mean, you can have the best company in the world and you can't just blindly say buy. You know this, Tom, but
yeah.
It's always at what price, what multiple. We know that Apple had gotten down before they got into services and everything else. They were sitting around at 13 PE forever because they were basically considered a hardware company. And then they started to get out there into growth. And, of course, here we are at a forward PE of 28. But you mentioned the competition. If you're bearish, that would be a little bit concerning. The commentary from the government, the government officials not being able to use the iPhone, the softness of the consumer, the China consumer over there, the high unemployment rate of those individuals over there, and then the willingness, like you said, to throw down large sum of money on an upgrade. If you have an iPhone 12 or 13 and you're looking at the 15, what's the big upgrade that you're getting? Of course, it's going to be faster with a better camera and, things like that, but it's not that much of a innovation, so to speak. So those are some of the concerns, in terms of discretionary spend, and if we get some slowness there. The analysts have also been saying that this iPhone 15 launch has been the softest since 2019, so that's not a very good data point there. However, Apple has said, perhaps we got, the headset, potentially AI growth there. The stock is up 5% heading into the report. It is still in a downtrend technically, and we're right at the 50 SMA right now.
Yeah, option market.
There's some red
pricing
candles
about
on
a
SPY.
$6
Okay.
move in the shares.
See if we can break it out.
Implied volatility is elevated, but not like exorbitant amounts like you typically see going into an earnings event. But you got an example trade here for us, Nathan. Break it down for us.
Sure. So, I cited perhaps some of the reasons why you might be concerned with Apple. If you looked at the analyst commentary, some of the price target trims that we've seen, some of the commentary around the iPhone launch, the delays in the watch, those types of things. Technically, we're up 5% heading into the report. So if you had a bearish view, as an example trade, one way to approach this was to look at the higher implied volatility for this earnings event. And I was looking at selling a 170 call that expires tomorrow, and then going next week and doing a diagonal. I'm going to buy the 175 put that has a lower implied volatility, establishing and then, Tom, you might say, well, why did you select the 170? You mentioned the implied move of about $6. If you look at that P&L graph, ideally, on a strategy like this, you would want Apple to close basically right at 170 by tomorrow's expiration. So the last I saw, the debit for this was basically about $2 or so,
Mike's so annoying.
to put this in. So you have the potential there, depending on where it closes tomorrow, to potentially you got that. I see your break evens at 178.50. And it's bearish in nature. You're utilizing IV. You could put on a bear put spread, but by doing this diagonal, you're not going to get zapped so much by that IV that potentially will drop off tomorrow.
Yeah, let's break this one down. Going out to the November 10th weekly series, so 8 days to expiration. Buying the 175 strike put, that's closer to at the money. It's got the higher negative delta on that one. Buy the 175 strike put, and then in the near term, November 3rd weeklies that expire at tomorrow's close, sell the 170 put. So $5 wide bearish put diagonal to the downside, paying a debit of $2. So there's your risk, $200 per spread. That break even at or around 178.50. So even if it kind of consolidates here, you have potential profitability on this one. Going into expiration, you've got some assignment risk on that short 170 put in the near-term options that expire in about 28 hours here. But this is definitely an inexpensive way to play to the downside, maybe that one standard deviation move, which is right at or near that 170 strike. And I like the fact that you looked at this. This is an earnings example type trade, but you're selling basically a 79% implied volatility on aggregate in that 170 put that you're selling in the near term, and buying about a 36% aggregate implied volatility in the November 10th weekly 175 strike puts. So that divergence creates a $5 wide put diagonal that you only pay $2 for. So taking advantage of maybe that differential between the implied volatilities, collecting some time decay or option premium on that short option in the 170 strike put that expires tomorrow. So a good look at downside play here as an example in Apple if you think it's going to go lower. All right, Nathan, let's take a quick break. When we come back, we're going to be joined by Landon Swan from Likefolio for discussion on Expedia. Most of the travel stocks have been in a slide since...
doubled up on this bet twice. That's hilarious. Pumped about GME today? Probably not anybody that can look at more than just the last couple days. And cannot look at the rest of the market. It's completely risk on. Market SPY's bouncing pretty good right there. Volatile candles at 12:30 chop. Ugh. So broke above that channel. Still have these kind of lower highs right here. Curious if it holds that or not. That's probably I'll be cutting. Should be going along there really. Just don't think I have it in me when it's up 1.5. They're a good time to add to puts. We're getting to calls up here, we'll see.
Of leading indicators, if we look at the airline mentions and then we look at Expedia mentions, is there something that leads in terms of either the happiness or the number of mentions that rolls over that might suggest that travel demand is waning?
Yeah, I mean, the chart's quite bearish until we break these resistance levels. We're in a downtrend.
Broad travel mentions that are not specific to airlines. We've got airline specific mentions, hotels, rental cars. We've got it all. And I think that the key is that we're seeing travel demand is holding steady, but it's shifting. Like I said, it's actually kind of moving into these shorter stays, which I guess if you want to think about it, shorter stays are going to be less economic activity for everyone involved. So while people are about the same as far as quantity of travel, we're actually seeing shorter duration. So that could be a negative leading indicator for the sector as a group, yes.
Yeah, and Landon, when I look at this, I look at like the hotels and the airlines are down significantly. They hold assets, right? They hold planes, they hold buildings, they hold real estate, and I think maybe that's part of the drag here. This is an asset-light model. They've got Verbo, they've got
AMC I'm more bullish on right now, yeah.
One of the caveats that might help them in earnings is that they don't own any of the assets, but, travel demand is still there and people still use these products.
Yeah, that's a two-way street.
But they have earnings coming up.
They've got no assets that.
And I don't know what's going to happen with that.
Depreciation, all that, and concerns with. But at the same time, technology moves very quickly, and if they don't innovate and adapt, someone else will. And so it can very quickly shift to where they are completely. In general, websites, I'm talking about in general, not necessarily Expedia, but website can be, put to the wayside very quickly. I mean, just rewind and think about all the search engines before Google, right? I mean, Yahoo used to be #1, and then you can list 10 or 15 that most people have never heard of anymore.
It's funny.
So that can happen to a website.
So love Sterling.
You know, hard assets don't go away as easily as the potential traffic on a website. So they have to innovate. But the caveat there is everything that I'm seeing from their management team is that they are innovating. So I'm very, very bullish as far as the direction of the company. I think that they know what they're doing. They're handling their business very well. They're setting themselves up for future success. I'm not worried in the immediate that someone's going to come in and just completely take over, but that is the other side to being completely digital, is you have to constantly be fending off these smaller competitors who are trying really innovative things to just take a bite out of your business. So Expedia is always a target.
Let's see here, Spy.
Always a target. They've got to be careful, but they are defending very well.
Yeah, and they're scooping up companies left and right.
Like it wants it.
You know, they own Hotels.com, Travelocity, and others in this space. So, hey, if you can't beat them, you just scoop them up, and that's what I think they've done. This stock's pulled back from about 122 pre-earnings last quarter, now down to about 94.
We're talking about the charts, Cassidy.
What kind of score do you guys have
not the
as far as
company's fundamentals,
goes?
I think.
We're basically
much more bullish
neutral.
on
We're sitting
GME
at
than
about
AMC.
a +6 on Expedia.
There it
A little
is.
closer to, I think, a +18 or +19, so a little bit more. Not hammering the table on either one. Definitely like them long term. If they would sell off a little bit on earnings, I think it's a good opportunity to pick up shares. I would not be surprised if they're flat or just slightly down after earnings. I don't think they're going to blow up. I hear after earnings, I don't think they're going to go up tremendously. Yeah, long term, I do like this company, like both of them. But I don't see a giant move coming out of this earnings report.
All right, great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder at Likefolio. Nathan, I looked at a strategy here for an example, kind of fitting in the mold of what you brought us on Apple as far as a diagonal to the downside, but you're taking advantage of differentiators between implied volatility levels because it's really elevated in the near term. Expedia expecting about a plus or minus $8.50 move either way. So I set up a double calendar.
Okay, there's new high on
here,
SPY.
Nathan,
Buzz is a big bull
I don't
flag.
care which way it moves, as long as it moves about a 1 standard deviation.
Looking for a
move,
red
either
candle
the
to close,
upside or
but
downside.
not so
let me break down
not
this
so lucky
example
yet.
trade. In the November 10th weekly cycle, so 8 days to expiration, buying the 103
Sucks
call
buying things that are
and
so high.
buying the 86 strike put.
To go higher, I guess.
Both out of the money on those. And then in the near term, November 3rd weekly series expires in just 1 day. Sell those same strikes, the 103 call and the 86 strike put. Nathan, you're only paying a $40 debit for this double calendar position. You can see here from the risk profile. I've got break-evens down near 78 on the downside and near a 115 on the upside. But your risk is $40 per spread, Nathan, on this one. You know, there's risk in it. You've got some assignment risk on those short options. But this is pretty inexpensive as far as not really taking a stand. You just want it to move, right?
Yeah, and implicitly, you're basically saying, Tom, that I trust the options market's ability to give us a fair implied move post earnings. You look at a stock like Expedia, it can be one of those gappers post earnings. So you're hoping that
you're working graveyard.
That the options
yeah, it's cruising by.
Is going to be accurate.
Not as
Some
much.
Of
He's
the
been
benefits with a
more
strategy
busy
like
lately.
this, like you mentioned, it's non-directional, so you don't have to have an opinion about what you think about the airlines or what Expedia is going to do or anything like that. This is really more of that
I think AMC's prime for
focus that's going
a big
towards
rally.
just give me the implied move. It's non-directional.
I mean, GME was sold off quite a bit too, but I don't see it reversing until we break those resistances.
Without its risks, as with
maybe it's already hit its support though.
What you don't want to happen
don't
here
know
is
yet.
just to get a outsized move one way or the other, or you don't want to
Jeez,
get a
guts.
muted response post earnings after we see
trying
the
not to
implied
close my
volatility
puts.
get zapped out of your 86 basically.
I know it's not a good time to, but
86 and
it's also
103 strikes there on
that's
the
my
call and
stop
put
right
side.
there.
Yeah, you bring up a good
But we
point
could
there.
be-
You don't want
could
the
be triple
outsized
topping,
2 or 3 standard
It's-
deviation.
even if we do go up.
move. I mean, Starbucks is a perfect example. We
Yeah.
looked at a call calendar in there, 1 week wide earnings type example yesterday, and it blew through it because it was more than a 2 standard deviation move on the shares. So as Nathan said, you don't want it to move outsized below 78 or maybe above 115, but at the same time, you don't want it to sit at or near where it's trading right now because you don't want it in between those strikes also. All your risk
about some there
is
too.
either
Dragon
sitting
on
still
GME.
or getting one of those outsized moves either to the upside or downside. But a good look at taking advantage of implied volatilities levels. And on this one, Nathan, you're buying basically an 84% implied volatility on an aggregate
Dude, I
basis
didn't
in
get
that
the
November
flush.
10th cycle, and selling about a
I got so lucky.
206 implied volatility on aggregate in the November 3rd options that you're selling. That's why it's so inexpensive at this point. But a good look at a double calendar position. Don't have to pick a direction. You just want it to move a little bit. All right, Nate.
Goldilocks porridge. Goldilocks
He's
porridge.
not going all
too
in.
hot, not too cold.
Right, and you got to remember on those risk profiles like that where it shows you maybe be able to make $400 per spread if it hits either the upside or downside strike on this. It might not come true because implied volatility will come down on your long options also. Maybe looking for a double or a triple on that type of example.
Yeah, these are snapshots in time, right, Tom? And we know those Greeks are dynamic, so that's a good lesson basically to communicate to our viewers.
Yeah, definitely. You want it to come true, but a lot of times it doesn't. All right, thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research, joining me today. But we're going to take a quick break. When we come back, we're going to take a look at another stock that reports earnings. That's Block. Stock's been down pretty significantly this year, about 30%. They've got earnings. They're popping today on the back of PayPal. Fast Market's coming right back.
Six, 8. Already got the 6. Congratulations. Play terrible poker. Broker's up 30%. 17% on Beyond. Closing these puts. This is the place to get calls. I don't want them. You mean, photos of Adam Aaron or something? I have no idea. I don't know anything that's going on with that. Who's they? Buy is making an RSI divergence here potentially. Doesn't keep rallying. Someone on the inside. I'm not a skeptic like that. Or I'm skeptical, I guess, of theorizing. Teladoc losing its steam. Space still holding on 11.5. Run 8.8. A blue 4.4. Dish almost 5. And beyond, AMC up 4. GME up 4. Nice guts. I think someone would profit on the inside from becoming bankrupt. Someone on the inside, like someone that works for the company. Hard-dated calls. Table is expensive. Repair probably, I don't know. expensive table. I might grab some puts again at the top of this channel. Probably get tomorrow's puts. To think that someone that works for the company would profit on it going out of business is pretty far stretched. SPY's up 1.6. Flush. Oh, pair of queens. Don't have the flush. Be a little tapering going on up here. Holy red candle. What the heck? Well, it just broke my channel there, but can't enter on that. had the same thing happen today at, what, 11:15? I don't know what's going on there. But yeah, we do have a divergence on the RSI. For some bouncy bounce. If you get another opportunity. Looking for a green candle now. What a choppy mess, man. Right back where I closed those puts. Actually below it. Okay, got back into some puts. Getting tomorrow's not getting dailies. A buddy that was planning on shorting a company wanted to place you in a high up position. How would that buddy place you in a high up position in a company? What's up, Hamza? AMD? What time frame? I just look at daily just to get a. They should have earnings, right? Sorry, I got like kind of a sore throat. Now it's like just making my voice all messed up. I mean, it's in definitely a downtrend there. Did make an RSI divergence, a bullish one. It does look like it bounced on that 200. You're just kind of right in the top of the channel at this point, so probably a good spot to short it. And then if it breaks here, flip it to a long. But otherwise, you're still in that descending channel. I folded. Someone re-raise. Whoops. Choppy.
As their quarter would have told us. That's amazing to me. And again, the fact that they're able to now offer outside of just traditional restaurant delivery, What this is so
Gemini.
amazing for is if you're ever traveling, you can use DoorDash to get access to like various pharmacies, various grocery stores. I've used this tool so many times because I must pack terribly, Alex. I always forget like a toothbrush or something. This is amazing for that. And I will pay a premium no matter what to get those like essential toiletry items delivered. It's amazing for that. So I can
Look at
speak
that
to some of
chop
their
on
strength.
SPY. Let me grab some more puts if it retests the top of this
There's
channel.
some interesting things here. I mean, the fact that they're seeing the total number of orders grow, I think, is extremely important if you're an investor in a name like DoorDash. The question is going to be down the line, is DoorDash just winning amongst its peers, or is this whole pie growing and they're just continuing to keep pace? Because if it's not a growing overall segment, that's more concerning down the line as those things like student loan repayments or potential, just economic cycle impact, consumer spending. That being said, for those who are worried about a huge drop-off in the amount of activity with these type of services post-pandemic, it's not really happening.
It's not really happening, but I think it's ramping up. I mean, their sales were up almost 30% from a year ago. That's amazing to me. And again, we live in an urban area, so I'm like, I get it. Everyone I know, I mean, I see DoorDash constantly at my apartment building, but that to me feels so niche. Like we're in the area where they should be flourishing, right? I can't imagine it's the same in the suburbs, but I mean, hey, maybe they're serving different markets than I'm even aware of.
Winter's kicking in too. I think that has to juice those orders a little bit with those cold weather fronts.
No kidding. You get snow in Chicago on Tuesday, and all of a sudden the DoorDash will start picking up rather rapidly. Our last name today, though, here is Starbucks, actually fitting in a very similar world to DoorDash, but Starbucks also with a nice move higher today, pacing for one of its best days in nearly 2 years, also leading the S&P 500 today on the back of, again, what was a really strong report.
Hi there on SPY.
Customers are continuing to favor more premium beverages as a new normal
Top of that
as it
channel.
relates to their mix and customization.
It's breaking it, maybe.
Seeing consumers willing to spend that extra $1 or $2 on customizations, and it's paying off. Average
miss.
tickets in North America rose 6%, was up around 5% internationally. The CEO also said they are not seeing any drop in demand for their food and beverages in this current environment, noting that the company was in very different shape back in 2008, a year when some analysts have made ties to this year back to then. And they said that given the more diversified set of channels they're participating in, they are just in a different place. That is the most optimistic, to say that we are nowhere close to any demand issue, that we are seeing actually people paying more. It's amazing. And you've always said, Alex, and I did quote you on Futures today, where I said, you've always said this is like a staple. This is something people will not trade down on. Perhaps they'll trade down in other areas, but they will pay their $7 for their Starbucks.
I say this with love. This is the world's biggest cult. I mean,
I know.
This is something that you don't have to overthink it. It's 20% off its all-time high. And this will be the last thing that loyal Starbucks consumers cut out of their budget. I just promise you that. And so from there it goes, well, how do you value it? It looks like we're off by 11% just 24 hours ago because the stock is jumping. It's impressive. This is a company that has done so many things right. It is so big. It's hard for it to continue to grow, but it just does. And, they bring you in, and not only are you getting a drink now, but you're getting the breakfast item at the same time. You got to tip your cap to a company that has seemingly, besides the fact that they just continue to twist the screws on that reward system, other than that, basically everything that they could possibly do right, they seemingly do right.
So reward system up 14% to now 33 million members just in the U.S. Just in the U.S. I mean, that is crazy. That's like, I mean, it's not every person you know, but it feels like it is. And that's the most amazing scam of the entire cult, because I just keep adding money and I don't even know where it goes. So I guess they're getting me somehow, and I'm not even a coffee drinker.
It's just an interest-free loan for them.
It's amazing. So, I mean, kudos to Starbucks today, right now, bucking the trend we've heard from so many of these consumer discretionary names. But we'll be diving more into our upvoted names that have not yet reported, that we'll hear from later today, those being Apple as well as Block. Looking at some example trades as well as some key technical levels in both of those names coming up next.
Well, it's 1:15. Doing it. Support today, guys. One more day in the week. First week of November. 15 likes. I appreciate it. Hit those 15. I didn't get distracted. Probably wouldn't have still had calls from here, but I would have been up a bit. Maybe I would have had one for the homies still. One or two. This was a smaller position though, just because it was kind of earlier in the morning and I didn't get it at the low. I got it on the breakout, which is not my preferred method. So it would have been up crazy. If I had the position sizing I got on these puts up here, yeah, that would have been nice, but $115. Dude, we're halfway to the top of the channel. That's crazy. I was like, well, we'll see if we'll make it back in down here, and then made it in. I'm like, well, we'll see if we make it to middle of Bollinger, the 20-day. We gapped above the 20-day. Just a full green candle above it. Crazy. Yeah, look at the Bollinger moving up. Crazy. Started with this RSI divergence. We saw that coming. I didn't want to get calls because I do see we're still in a downtrend. But this has been a pretty frothy bounce here.
On the back of these gains that we've experienced during the past trading week or so. So that's an early sign of potential trend reversal here. You know, that could be aided by the earnings event that we have coming up. Could be the recipe for a breakout. And you know, obviously the bulls would want to see it move to the upside here, but you never know. The signs are pointing more positive here in terms of our conventional trend following analysis here. We're above all our moving averages. They're starting to turn upward here. So based on that, we would say that the trend is looking more toward the bullish side right now.
So as far as momentum of this trend goes, I know we're up around 5.3% this week, but it hasn't felt like that. I felt like even in the days that Apple's higher, it's been relatively quiet. So I'm curious in what momentum is signaling to you here, because it hasn't felt like the momentum of this trend has been super strong.
Well, you know, we have been trending downward in terms of RSI when we look at the longer term picture here, going back to those peaks that we made, those yearly highs in July. You can see as well, we've you know, just kind of got this mild slope. It kind of matches our price slope here. Once again, we're right on the verge of breaking out to the upside here with both of these charts that we're looking at here. RSI is crossing above that 50 midline there, so we've got one more tally in our bullish column here. But what we would really be interested in seeing would be a break, a concurrent break above both of these trend lines here. That could be a very interesting situation here, because that would mean that we are experiencing a technical breakout on two fronts here. We do have some resistance we'd have to contend with still, but that would be a bullish sign. That would mean our downward slope in the RSI would be invalidated. That would mean momentum is starting to pick up again. But we're already crossing above into the bullish territory here. So once again, trend is upward in the short term here. Momentum is up, but we do still have to break above the resistance for it to really seal the deal, so to speak.
Right.
Gonna go up more than it goes down.
Support and resistance that you're keeping on your radar. Tell us what you're watching here as I do think these levels will be monitored very closely for the next several hours before these results.
Well, right about where we are now is pretty important. Once we add in the volume profile study, this blue bar graph on the right side of the screen that shows the areas of heaviest trading, we can see this thick red line, our volume profile point of control, the absolute heaviest area of trading, lines up pretty cleanly with our orange 63-day EMA. It's also pretty close to our trend line. So the area between like 176 to 177 or so is a really noteworthy price point that we're at right now. It's looking, you know, we're above two of the three things that I just mentioned. We still haven't cracked through the trend line. That would be the other important piece to look out for. If we were to make it through to the upside, take a look right here. We've got the low point before we had a gap downward that lines up pretty well with when the gap was filled there. So around 180, 150, 182, around that area, that could be a potential resistance point. If we were to keep going up, the old highs right here near about 190 would be another important spot to watch. If we break lower, we've got any of our moving averages to potentially provide some support here, but this green line where we marked these lows, that was the site of a gap from all the way back here as well. So around 167 would be the lower extreme that you might be looking toward if you have a more bearish outlook in this name.
Yeah, I think really well put. So now to consider trading this, given all that you've sort of outlaid for us, Alex, I think this is a little bit of a precarious situation because Apple could post really strong results, say like really strong, they don't typically post guidance, but say give really strong outlook for the rest of this year. But if the job numbers tomorrow disappoints and we see some shakiness in the overall market, I feel like this could overshadow what could be a really strong event. So for that in mind, considering there's an added risk and that's just the macro element to things, walk us through a more neutral strategy.
Yeah, I also think you have to put into context and take into account the fact that the stock's up almost $10 this week. And so when the stock was near its sort of recent lows, I think the conversation was one of, is there room for outperformance? You know, we saw a lot of these names that had outperformed into them really getting beaten down for okay numbers. Think Meta, think Alphabet. But on the other side, these names that have struggled, PayPal, they were able to outperform. Well, now I think the conversation for Apple is far more balanced. And so I looked at a more balanced type of a strategy. Also keep in mind historically, this isn't always indicative of the future. This is a name when it's disappointed and sold off. Buyers have come in and worked this thing back towards unchanged oftentimes. But of course, it could outperform to the upside too. We're going to sell in the 177.5 straddle tomorrow and buying $7.5 wide wings for a $5 credit. This is going to create a $10 wide window for an option strategy that expires tomorrow in which this can be profitable. Now, you can only do this, Jenny, because of what you talked about, jobs data, and more importantly, the company's earnings event this afternoon. What a trader who did this type of strategy would look for is a move that was less than expected. So right now, the market maker moves around $5.50, $6. You would look for less than that. If that is what is delivered, there's a chance that this thing will be trading for less than $5. And given the fact that it's the expiration day, most traders, if they could, would elect to try to buy that back ahead of time as opposed to taking an assignment and exercise. But break even's 172.50, 182.50, $250 in risk. So it's a $7.5 wide spread out of the $5 credit. Max profit is $500. That's right at 177.5. So your best case scenario would be no headlines made from Apple. Probably not really possible given the fact that it's Apple. Even if it's a boring earnings event, there's going to be tons of headlines made nonetheless.
But like to your point, maybe just hoping that we got the volatility earlier this week. I mean, we're already seeing a good $3 move just today, which is, a good portion of what the market is already pricing in. So perhaps the volatility has already ran its course. Of course, we will have to wait and see once we get those numbers. But our next name today here is Block. Now, I still want to call it Square so badly, Rick. But Block, its best part of its business actually currently is its Square business, which is still remaining just grow and remaining actually strong. They do have crypto exposure, really interesting report, but also a name that's making a pretty sizable move to the upside even prior to these numbers.
I see a pullback.
Yeah, a nice move up today, but the recent picture
with that resistance right now.
Months has been quite rough.
Yeah, but we potentially be good hitting those highs. You don't have to be on the 30-minute. You can see on the daily, you can see on the hour.
Trend line here, we're down like 47% from that point.
So that's our next price target would be if we break the channel.
You can see once again we have kind of a falling wedge type shape here, demarcated
never
by
mind,
our
'cause that's
two
above it.
blue trend lines, both trending down.
Yeah, it'd be a double top up there,
converging
maybe.
toward each other, that we broke through. We broke through this other
it's
more
not just gonna keep
shallow slope, this
going
white
right now.
dash trend line that we had
I don't
starting
know, you're
after
talking
we
about
had
like
our gap
swing
downward
trades?
here. So we've broken through our indicators that
30-minute
things
chart's
have
not giving me
been,
any indication on what to
trending down,
day
but
trade
we're
on
still
calls or
making
puts.
lower lows. You know, that's kind of one of these funny situations that can happen. Not so funny if you're bullish.
But yeah,
pardon the
swing
phrasing
trade.
there, but unfortunate situations, let's call it, where our downward
I'll be looking
sloping
at
trend
a double
line
top here,
became more
checking the moving
supportive
averages.
than anything else. So we
Open up
did
some
make
spot
some
puts.
new yearly lows recently.
If we
near
break
the
that,
38.85
probably add some
mark,
or
this
get some
green
atop the
dashed line
channel.
here. Nice gap up today, though. We're up more than 6% still. We're hanging on just
Break that.
above our 21-day
we could
exponential
be hitting a
moving
new
average. We're about
high
5
up there.
cents or so, 4 cents
A gap
above
fill.
it. So just hanging on for dear life above it. That
Little
would be
Santee
a
rally.
nice close for the bulls if we were able to recapture that moving average here. But you know, it's a bit of a band-aid on a big wound here so far, because look at how far below our moving averages we are still. Our two longer-term moving averages still trending downward, still pointing downward here. We never really were able to kind of recapture our upward impetus here. So kind of struggling, but an update that's pretty nice here. We'll have to see what happens later.
Rick, I like that you said funny isn't interesting, not funny isn't haha. They're very different, and I completely understand the point you were making here. But as far as RSI goes, walk us through what you're seeing for momentum of this trend.
Well, the first thing I noticed is that we saw some notable bullish divergence recently here. We had some rather low readings below 20 in the RSI in the oversold territory of our indicator here. Price continued to fall and made new closing lows. RSI actually was trending upward though and held on above that oversold area here. Now we're moving upward once again today. We're stopping just short of that 50 midline though. That's what you'd really want to see, would be a crossover from bearish momentum back to bullish momentum here.
Higher straight, I guess.
That would ideally be what you'd want to see as well, because we are breaking above a resistance level in our 21-day EMA. So we're not getting quite a match in terms of the RSI here. That's something to keep an eye on as we continue and we head forward in this situation here. But a little bit of bullish divergence did pan out here somewhat. You know, that's the kind of thing you try to look out for in the future.
Yeah, I think really well put. So now, as far as some support and resistance you're keeping on your radar here, walk us through what is sticking out to you.
Well, once again, when we add our volume profile study here, you can see the areas of heavy trading. You can see right here, we've got a nice spike around the 45 area or so. So right around this area, you know, would be where we'd want to clear. So a little bit to the upside, that's another resistance area that's revealed now that we include this study. If we were to continue trending upward here, the area that I mentioned here, this small gap that we formed and the highs that we reached after we broke out from our falling wedge type shape, we did fill the gap. They lined up pretty well. Near 47.50 or so would be the point to beat to the upside. Beyond that,
yeah, I'm not expecting like a reversal.
EMA, that could be another area to watch, just below 50.
Well, I guess I am at this point. This late in the day.
We could see if we fill
130. I think we definitely could move back towards some safety.
So look to that area first, but then those old yearly lows.
But yeah, we hit 429.82, so pretty close to that 430.
That would be the final line in the sand to the downside.
Yeah, I
this
think
resistance here, that's where I have that 429.88.
We'll move to the upside today, but
so
still
somewhere
down
right around there.
Considerably on the year, and still been an underperformer, no doubt about it. But we'll leave it there. Appreciate the breakdown as always, Rick Ducat, our chart master. So now, when looking at this name, Alex, walk us through what you're thinking for an example trade, because unlike Apple, we haven't seen this degree of strength into this report, I guess, outside of today, though, because a 6% move is huge.
On the heels of PayPal as well, so not totally unexplainable. Three things coinciding with
I'm not convinced I'll be able to get a better, be able to time a better entry, so that's why I'm just in my puts for now.
And of course,
you know what I mean? Like, yeah, maybe it does come up more, but maybe I would get into the puts until a worse entry that I'm already in. So I'm not just going to arbitrarily close them, because I think we could go up a little bit more.
47.5 strike is the level that we targeted.
I see a big tapering channel here
30 cents. That means 30
from our
bucks in risk.
earlier bullish
trade,
channel.
Jenny, but looking for a test at that
rolling over.
47.5 level post
We still have an RSI divergence in 5 minutes.
Expiring tomorrow.
Yeah, right. And this, I mean, this
Top
name,
might not
we'll have to see. 'cause
perfectly
it's
be
not a
in, but
volatile
I'm not
one, but I
counting
do
on
feel like a
timing
good
the
amount of
top
this
perfectly
volatility
either.
could already be priced in, but obviously we'll have to wait and see for both of these names when they
But
report.
yes,
today after
lots of
closing
chop. I
bell.
could have
Now coming up
waited,
next,
of course, in
it's time
hindsight
to
here.
recap a name that already reported.
We
That's
very well could have just
Qualcomm,
sold off
with
right
a
here.
nice move to the upside
Made that head and
on
shoulders and
perhaps
broke.
results that were better
But we
than
bounced
feared.
and
We'll
built
discuss
liquidity
more
and
what the semiconductor stock says for the rest
now
of this
making
year.
a new high and building more liquidity. So see ya. It's setting up for a nice little head and shoulders. Coming down today. New high up 1.7 on the SPY. I think it's time for coffee. There's 430 on SPY. I mean, I don't think bulls have a target of 431 as opposed to just where we are right now. There's nothing else left up here until we get to 436, which I'm not gonna get today. Maybe after hours with crazy Apple earnings. 437.5. They've done their deed. It's also why I got tomorrow's, in case I have to wait a while. Till like after hours even.
This afternoon as well.
See, that's what I found so interesting was the relationship with Apple, right? Because that's one that's so important to Qualcomm. And that still is a pretty major question. So no doubt about it that we saw this company beat on its earnings per share. They beat on their overall sales, driven by stabilizing, to quote, Android demand, with largely inventory restocking being a huge benefit. This is interesting to me because the relationship with Apple was so forefront, so front and center, so headlined, but it's like the actual benefit for this quarter, it seems, was its Android relationship. Android never gets enough love, so I think that that's a really key part of this story. This has also seen continued strength in a very token demographic, being in China, as another positive that's heading into this back half of this year as they continue to see Android strength overseas. So Qualcomm is looking to diversify its business, though, to stop some of its heavily reliance on its smartphones into areas like automotive chips. It recently unveiled a processor for PCs that are capable of running AI applications, which then will challenge a name like Intel or an AMD. But with handset inventory largely cleared, the story now for growth in the next year is going to be how it can sell its AI capabilities. This is one that has not been caught up in the AI arms race fairly at all. I mean, I think that the fact that we were pretty much flatlined into today's print just goes to show the way that this name hasn't been caught up in the AI craze. That could be actually potentially a good thing, but it does remain very much in question what AI looks for them for the rest of this year and what that relationship with Apple looks like, because Android looks like it's strong for them right now.
If I were to kind of sum this up and try to make some sense of it, it's not necessarily about the numbers this time around. I mean, you're still talking about, over 20% decline in revenues, over 35% decline in EPS year over year. But sequentially, it's an improvement, and it's more about now where the expectations are to return to growth starting next quarter. Modest, let's call it flat year over year is the expectation now, but that's a lot better than down 24% in terms of revenue. So rounding the turn, bottoming out in terms of the earnings picture, I think is how I see this.
Right, and of course, regarding that relationship with Apple, they did just sign a 3-year contract to be the main supplier of their 5G chips. So that's something we know won't change. It's not like Apple will give an update.
They bought themselves some time.
They
did
buy, and I still think that Apple's looking to part ways with Qualcomm, but that will not be for at least the mid to even long term. That will be years away. So buying themselves some time. Nice earnings report. Of the analysts covering this name, 23 do have buys, 11 holds, 1 underperforms, 0 sells. So skew optimistically, but we need to see some of this price activity hold and do something.
If I did even take calls where I wanted to, I would have gotten totally chopped out. I've been right here on that break.
When trading this name here, Alex,
and this
on a
big
day
flush,
when we're
and then
a nice move to the upside,
chop.
But considering the fact that we're still
This upside is
well off of
just hard to hold through all this.
16% off of those highs as it stands right now, and up now 11% this week.
And sitting could have been better.
Position.
Yeah, if you're looking for some of this optimism to spill over to the next couple of weeks, I got a strategy that would
Still
benefit
tapering,
from
still
that.
diverging.
Looking at buying a call.
But yeah, maybe today we're out of runway.
In
Not
the
sure.
money, out of the money spread, kind of your standard setup here for the call debit spread. Just going out to the November monthlies, expires 2 weeks from tomorrow. And Jenny, we're looking at buying the 115, 120 here. If you can spend around 250 on a debit, well, that would hit one of our loose guidelines, which is half the width of the strikes on these spreads, creating an equal risk to reward ratio, risk 250 to make 250. Now, the break even would be 117.50 in this case. You simply add that debit to the long strike of 115. And granted, that's a little bit above the current share price, but it's within a stone's throw, I would say. At 116.80, it's only about a 70-cent rally, and that's under 1%, of course, for a stock that's trading over 116 a share. So within the ballpark when it comes to the break even, equal risk to reward, but bullish, as of course you would need this stock to rally from current prices over the next 2 weeks to reach any sort of profitability.
Yeah, I think really well explained, and of course with a nice move that's held on throughout today's session. But now coming up next is actually time to talk our only name that is in the red throughout today's show. That is Airbnb, as its quarterly update clearly was not able to please the street. We'll discuss more of those numbers with Jeff Pierce coming up next.
Did it, Mr. Invest. Did you close your calls? 4:30 was you did call at 4:30 this morning, I think, didn't you? Did. He said we're hitting 4:30. Pretty sad. Chat's so short I can just scroll up and see it. But it's convenient also. No, I don't think we're getting any gap fills today. That'd be crazy. Not without some catalyst. Big gap fill till we finish our Santa rally or something. We very well could even consolidate and close up here. SPY's been making big daily candles, not much wicks involved at all. This whole rally's been pretty much full of full-bodied candles. Even before this whole rally, or this whole drop, there's like hardly any wicks. So, I think we'll get some drop, but they could consolidate and find, what, 429? Somewhere around here for support of that head. Hopeful for more of a pullback, but it's really have to happen. 3 days. Days got burned. Went for a bigger pullback and it just consolidates where it's at, closes. 12% on space. Gap fill up here. Almost 2 o'clock. Yeah.
Just Diva, that grew 26%. Their free cash flow came in at 1.31 billion. That was up 37% from last year. Where we really start to see some negatives here is Q4 expectations. They have revenue between 2.13 billion and 2.17. Analysts were looking for closer to 2.18. They also expect night booked growth in Q4 to moderate relative to Q3. And the company said that they're coming off this record travel season. They're seeing greater volatility in Q4. They're monitoring the macroeconomic trends and some of these geopolitical conflicts that could have an impact on travel demand.
There's some good here and reasons to be optimistic about the business model, I would say, Jeff, in the case that free cash flow, 1.3 billion, that's, better than the 958 a year ago. The trailing 12-month free cash flows are a record 4.2 billion. There's some positives here, and the business model starting to show that it can sustain. But I would love to give your thoughts on this. Look, I'm no analyst, but the huge trend this last year in travel was international travel. It was going to Europe for so many. And, I can say anecdotally, I know a handful of different people who did that. But none of them booked those trips a week before. Those were all things that were planned like 9 months to 12 months out. So when I kept hearing in early summer, oh, look at all the travel, the economy is going to be so strong. It's like, yeah, but you're looking back at 12-month, 9-month prior decisions. Now we're finally getting to the point where all those plans have been executed. Now we get to look ahead, and it sounds like there's some disappointment on the horizon here. What say you? What is the macro read-through from a comment like this?
Well, listen, the companies in the travel space have had a lot of issues. You talk about the wars that have come out recently. You talk about some of the headwinds with costs. Certainly, the economy has consumers being careful on what they're spending, and they're coming off this big travel boom, as you mentioned. If you look at somebody like Airbnb, they have their own specific issues as well. Cities are kind of changing the way their residents can use Airbnb. New York has been one of the biggest names around that. When we talk about booking out in the future, that's been a big thing around the cruise lines as well. And a couple of the cruise lines,
except for today's gap, but
yeah,
last 3 days
from cancellations, is somewhat to do with the fires in Hawaii, somewhat to do with the war that we've seen recently. Certainly, some of these issues, some of these booking issues, to your point, are kind of played out now. It's kind of what's going to happen next. Are we seeing that demand level off? I think we can say for sure we've seen it level off in terms of international travel. For Airbnb, are they starting to get to a level that we should expect is more sustainable for the long term after coming off such a big heightened growth period post-pandemic?
Yeah, and I think that's a really good point, Jeff, because I would like to see just some normalization from them. I mean, just some lack of volatility, if anything. I know that's not exactly the most exciting from a trading standpoint, but this is a company that was a pandemic darling. So we've just seen this reset, and we need some stabilization. I feel like that's the case for the tourism sector as a whole, although this name has held on to its year-to-date gains quite better than the rest of the airlines, for example. So kudos to them. I know we're making a move lower today, but it's been a pretty positive year
consolidating up
all
here.
year long for Airbnb. We will leave it there. Appreciate the breakdown. As always, Jeff Pierce. Now, coming up next, it's time for Under 30. We are looking at Palantir, revisiting another name that is up huge after its quarterly update. We are up over 20% as it stands, almost 21%. So George Tills will have more on that report coming up next.
Five, 6. Oh, 2 pair. You're high there on SPY. Ooh, came back just in time. For that full house. Hate to say it with your AMC. Yeah, no, I mean, even the whole sell-off was like pretty unmerited for what it was from the reverse split and the conversion of those. Like, yeah, there was dilution, but it was way overdone. So I think a proper bounce back up to I guess now would be what, $40. Prior split, that $4 resistance. Why is it saying 33? Isn't it $4 it traded at? I don't know. A bounce back up here, I think, would be in the works. We'll see, and it could be with this earnings coming up. Got earnings in a couple days, but the Taylor Swift and all that stuff won't come out until next earnings. But if we get more data on that, it looks good. It'll start rallying in anticipation for next quarter. I haven't looked at the IV on Apple. Little squeezy there on SPY. Look at that squeeze. Getting some volatility up here. See, if you have puts now, there's your problem. It's kind of staying below the top of that channel we had prior, though. It's interesting. Yeah, it's kind of using that as resistance now. Come on, aces. Ah. Wrong red card. I might end up playing Apple in my SPY puts. Hopefully I am out. I'm green before that question. Get the best thing for my sore throat. Iced coffee. I'm using my backup account to add to get some more puts if we are getting confirmation of a reversal. But I'll be patient with these. Patient like I should have been with my first account. I was pretty patient. I guess not enough though. Okay, now those calls that I had this morning, let's see what those are at. Those calls I had this morning, now they're 100%. That's crazy, actually. It's not that much. I think they should be more. They're over 100%, like 120. Does that seem low? I actually want to look at this. That's because they're at the money. I'm curious on dailies how much difference it is getting out the money. No, I've had 300% with a very small move on dailies. Why would these only be 120%? There were 427 calls bought this morning at 10:21. With this move on SPY, right now they're worth 120%. Gotta be because they're strike, right? Done 1000% on days on options with SPY, and it seems like today would be one of those days. Not sure. Maybe it's just like more end of day, less time. Okay, yeah, these. Okay, yeah, the 430 calls are up 2,500%. Crazy. Makes me want to play more out of the money. Sketchy. The 427s, they say, are up 1,400%. Who's this from, though? Like, open? Oh, this is from yesterday, probably. These are $1 this morning. They're $3. That's 300%, right? This must be talking about from yesterday. That's what it is.
That and much more on this show. In the meantime, take a look here at the markets up again across the board. You're seeing every single sector in the green, and the Dow and S&P up for the fourth day, the Nasdaq up for the fifth day in a row. So this is certainly the best week we have seen since I think July for the Nasdaq, and even before that for the other two. In the meantime, Nasdaq's up 1.6% at 14,908. The Dow's
427 were my calls I had this morning. I was just looking at what the calls were and comparing them to out the money calls.
43.12 up 1.7%, and even the Russell. Look at that. That is always seems to move more than
no,
the
the puts I
others.
have right now are
2.1%.
429s.
As we take a look at oil and gold, both oil and gold moving higher. 82.61 the barrel. Gold at 19.92
for tomorrow.
a troy ounce.
But I'll close them today.
Back at 105.97, and Bitcoin gaining 120.
I'll take the L on them today if I have to.
1,085.
But I will do it after hours.
Some of the biggest stories in the
Get some
markets. We welcome
Apple
in Kevin
exposure.
Green, senior markets correspondent here on Schwab Network, and we're taking a look at Apple because everybody's talking about it all day long. And you know, some people would say, so goes Apple, so goes the market. Maybe not necessarily. We'll see. I mean, the market's acting pretty good these days. Tell me about Apple.
1.8% on SPY.
Yeah, and actually, you are right there, Nicole. Actually, when we talked this morning, the expected move was actually at around 3.9%, around 4%. But right now, I just checked it again, and it's around 3%. So the market's even backing off on these expectations when it comes to Apple. Now, the revenue estimate right now is sitting at $89.03 billion. That would be a decline of about 1.4% on a year-over-year basis. And the earnings per share estimate right now is at $1.39. That would be an increase of 7.75% on a year-over-year basis. Obviously, we're going to be focusing on iPhone sales. The estimate right now is for revenues to come in at $46 billion. That would be a 7.9% year-over-year growth, and they are actually expecting to ship around 49 million iPhones for the quarter. Now, we do know that that estimate has come down here over the last month and a half because of potential weakness in China, but we will definitely get some more of that information on the conference call. And then we're also going to be focusing on services revenue. The street actually has estimates right now at around $20.3 billion when it comes to services revenue. That would be around a 6.3% increase on a year-over-year basis.
I got a full house.
So
Dang it.
very excited about this announcement. I know that we are going to be bringing it live once it hits the tape.
Yeah, without a doubt. So we'll watch that one. 177 is the current level right now. And then
He did bet.
DraftKings also reports earnings. And
Didn't bet
what are we
again.
watching there?
Yeah, the street is actually looking for revenues to come in at
He would have bet there if he had something.
$702.6
He thought I was
million
bluffing.
here. That would be around a 39% growth on a year-over-year basis. The adjusted earnings per share loss is actually coming in at 69 cents, but they have the ability to actually beat that expectation. I think that's where the upside move can come from here. The implied move from the option market is sitting at 9.8%, so the market makers themselves are expecting a pretty wide move to the upside or downside here. Obviously, we're going to be focusing on the gaming business in itself. The sportsbook business has been growing rapidly over the last couple of quarters here, and the market is expecting that that growth to continue. In Q2, we actually did see the average revenue per monthly unique player was around $137. So if we can continue to see it at that level or even going higher, that's going to once again assist them with the adjusted earnings per share loss as well as the EBITDA margin. And then last but not least, hearing about its iGaming segment, something that's kind of new for this business, but it is expanding into roulette and blackjack. If they continue to see some growth there, that could also help out not only the top line but bottom line
2 o'clock.
as well. So a lot of
Clock's ticking,
enthusiasm when
Spy.
we're looking at the stock's performance. Hopefully, it's going to be able to perform here today. And once again, that expected move is anticipating a
Far from
pretty volatile session in
5
the
moving
market hours.
average or 20.
All right, Kevin Green,
BWAP.
thank you. 2 big stories today.
Don't want to hang out up
Apple and
here.
DraftKings, thank you. Now let's take a look at the bigger picture.
Safety
Matthew
before.
Johnson's with us, President Owner Johnson
Apple.
Wealth and Income Management. Good to see you. So what did you think of the Fed's move right yesterday, which was no move, a double pause, back-to-back pauses? We got what we expected, but anything from the language that you were able to read through?
I think right now everyone's feeling the same thing, right? Everybody's just wiping their brows saying, boy, glad we dodged that bullet. The reality is that the Federal Reserve is going to continue to stream. They're going to keep that extreme, vague language. They want to be able to keep a little bit of a psychological lid on the economy. They don't want expectation of the rate cuts right away. They're wanting to try to keep everything quite muted. And I think it was pretty interesting because when we saw some of the data coming out last week, you know, when we see a pretty strong GDP number, when we see unemployment numbers down a little bit more than expected, I think that there was a lot of economists that were really expecting, you know what, maybe the Feds will go ahead and pull the trigger on another 25 basis point increase. But we are all very, very relieved that they didn't. Now, I think that the big question, Nicole, comes, what are they going to do for the rest of the year? And does this mean that they're actually halting? I think it's going to be over when it's over, and it's going to be over when they say that it's over. So I think we all have to continue to exercise that vigilance in being very, very careful to not make expectations the norm. I think we have to continue to rely upon what the Feds are doing and the data and how they're interpreting that data that comes to them.
Right, understood. So you still think that you're not comfortable to say this is the end of the rate hike cycle because of things like the strong GDP and unemployment coming down, and so we'll have to wait and see. That being said, what do you think about what's been happening with bond yields, and where do you see those headed?
Well, the bond yield market, if you're a bond buyer, I can definitely tell you that what's really hurting is the portfolio of the bonds that you have owned in the past. But what you were very much looking for is the deeply discounted prices within the bond market right now. We don't even have to look at the bond market, really, Nicole. If we take something just as simple as the preferred equity market, and you look at that, look at those are contractual, just like a bond is. They've got a par value, just like a bond does. And what we want to do is we want to be able to value invest. there's a lot of good, strong companies out there that have good quality bonds, and many investors have bailed. And it's our responsibility to do our due diligence, but look at the yield that you're getting now on the bonds if you can afford to buy them. And not only that, but look at what would happen if you're able to purchase shorter durations and you got bonds that are going to be maturing in, say, 2 years, 3 years, 4 years, or 5 years, and they're returning to you an exponential 15% capital gain, maybe 20 or 25. So we cannot discount that, and that exact same thing is also happening in the preferred market as well.
You know, would you say, we talk about monetary policy so much, do you think fiscal policy and monetary, they're supposed to work together? Do you see that happening or not necessarily right now?
I think right now there is a major amount of disconnect that is actually happening. I was watching an interview or a press conference that was taking place back in Reagan's era, and he was talking about, you know, when unions and so many different factors, they increase the wages, it ends up being a tax on the actual individual. And we see, thank goodness, that all of the strikes are done with the UAW. But I can't help but think, you know, that's going to cost automotive manufacturers more money. And I get why they're doing it. I get it. I understand it. But ultimately, where's that additional cost going to come from if it doesn't force the value of the automobile and the price of purchasing that automobile up? And so we have to be very careful to understand right now what's happening in Washington versus what's happening in the economy versus what's happening in the average, you know, home today. There is an awful lot of disconnect between all three of those areas. And I'm very concerned for the average family, where I'm seeing so many more individuals that just aren't making it, and they're having to rely upon, say, things like credit card debt just to pay the bills, hoping, just praying that in 2024 we see those rates come back down.
Right, understood. And then last but not least, we talked a little bit about investing, and you said those who have had old bonds, maybe not so great, but what would you advise to folks now if they're investors, whether it's stocks and bonds? I mean, we haven't talked much about the equity market. What would you advise folks?
Well, I think in many respects, the market is probably going to remain. You're going to see rallies like this. You're going to see some optimism that leaches into the market, and you're going to see that you have some really good days. And today's one of those days. We should be celebrating the fact that the Feds didn't raise the interest rates again. But at the same time, you know, all throughout 2023, I've encouraged all of your listeners and your viewers, as well as my own clients, that we want to continue to reinvest. We want to continue to dollar cost average into this market. Yeah. It's very, very difficult to be able to time the market and know when to get in and when to get out. But if we have a good, solid basis of dividends and interest that are flowing into our portfolio, now we have the opportunity to every single month reinvest those interest and dividends, whether it be in the bond market, whether it be in the equity market. Right now, there's a lot of good quality equities, Nicole, that are pushing almost 5% in dividends. Think about that. That's a bond-like yield, but it's still an asset that has some appreciable characteristics. And I think we don't want to play small. We want to be able to be buying right now because, let's face it, we don't know what the future holds. We don't know what the Feds are going to do. Yes, things could break loose and decline, but we want to be looking optimistically down the road and being able to buy some good quality things today so as to help our future become more successful tomorrow.
All right. Thank you for all of that. Great to see you. Really appreciate it. Matthew Johnson Wealth and Income Management. Coming up next, a look at the international markets. We have a pro with us, of course. Jeffrey Kleintop is standing by. He'll give us a look about some of the geopolitical concerns, Japan policy, and much more here on Schwab Network. We'll be right back.
Got jacks on the river. Oh my gosh. Little fleshy candle there on SPY. That'll be our third one we've seen today. Got super lucky on that river. At least he knows it. But we are breaking back into that channel with that flush. To see some head and shoulders start playing out. This one right here it grabbed. Need to grab some right here. Some more right here from over here on a break of that channel. This is where I was going to add, but I just decided to add up here instead. Could be a mistake. Those violent red candles today are kind of odd. And right back out of that.
Company estimates that the UAW strike will have a $180 million impact on revenue. Stock is down nearly 20% year to date. And then there's Tesla. Shares are up more than 4% today as part of a broader EV sector rally. The company sold more than 72,000 China-made EVs in October, and that's up 0.6% year over year. Tesla's stock is up more than 8% this month. And here's a look at Bitcoin, which I noted was above 35,000 now. Check it out. 35,000.
Liquidity grab or something is strange. The stop hunt.
Discuss here at home in the international picture, the impact of the Fed's rate decision. Jeffrey Kleintop is with us, Chief Global Investment Strategist at Charles Schwab. Great to see you, Jeffrey Kleintop. So we know the obvious when it came to Jay Powell yesterday. What stood out to you?
I'm sorry? I missed the last part.
What stood out to you from what we heard from Jay Powell's testimony yesterday? His Q&A session really as well.
Yeah, I mean, I think there were only 3 minor changes there in the statement, and that's probably all we need to know. The describing
9 or
the pace
10,
of economic growth,
nothing.
they changed it to strong from solid. And in describing the job gains, the wording was changed to moderated
everyone had pocket
from
pairs.
slowed, and then the word financial
And we're just
was
higher.
added when explaining how rate hikes might weigh on the market and economy. I think all that's notable because it may mean that the Fed believes higher market rates may be doing some of the job of tightening for them, and further suggests they may be done hiking this cycle despite the stronger economy in the third quarter. Of course, the 2-year yield fell sharply after the statement was released and stocks rallied, and that's following through today. And that suggests that the market believes the Fed is probably done hiking rates and cuts may soon be on the horizon. While Chair Powell explicitly stated they're not discussing cuts at this time, the market's increasingly confident a series of cuts is set to begin. Just about 6 months from
interesting.
now.
Yeah, I mean, there's a lot of folks who do think that. In fact, for yesterday, it was pretty much 100% they would not raise rates, and it's 70+%. I know for December, and much the same for January. So, you know, the question is, are they really?
Yeah, it does.
hiking,
Does
and
make
will they
stop
cut?
hunts a little
But
bit.
as you said, he's not really alluding to that at this moment, sort of keeping it close to the vest. Why do you think he's doing that?
Well, keeping his options open. I mean, obviously, you know, the Fed has been confident before about the direction of inflation and proving to be wrong. So I think
I mean,
it's
it's
a
not like
little
we
bit
see
of
it every
wiggle room
day.
should they need to increase
Oh,
rates
yeah, I'd say
again.
it's
And I
a
think
little
the
odd.
entire Federal Open Market Committee is not of one mind about where interest rates are headed next. You can see it in the dot plot. There's still some dissension there, and I think rather than conveying an overwhelming degree of confidence in the direction of yields, he wants a little bit of that wiggle room, but also wants to make sure market inflation expectations continue to come down and that the Fed is still on the case. And, you know, appears to be the case in the market here today and yesterday, yields coming down. The market's welcoming that news. Just one of those great investing days to be alive. positive. Bonds are rallying, stocks are rallying. It just feels really good. But I might chalk that up to a little bit of volatility, because what hasn't changed is the overall global economic backdrop, which is still pretty sluggish. This week we got a lot of third quarter economic data. Didn't look good. The U.S. was strong. The rest of the world was not. And looks like those rates of growth are converging as we look here to the fourth quarter.
Let's take it abroad, because I know we were watching Japan closely, and you said it matters. Some of the Bank of Japan moves really matter. They've been
What's up, Izzy
basically
B?
abandoning yield control to a certain extent. The yen may gain
Mullen? Is it
some
still
momentum.
not delisted
What
yet?
does that mean for us here at home? Why should people
Let
care
me look
about
at Mullen.
this?
Does matter. So
Guys, chips first.
The Bank of Japan this week officially ended their commitment to buy an unlimited amount of bonds in an effort to keep their 10-year yield at 1%. They refer to this as yield curve control. They've kind of backed up. They said, it's a guideline now, not something we're going to be sticking to, although they did intervene just in the last 24 hours.
Everybody has this straight.
Keep yields from moving up too quickly. So why this matters to us as investors is so there you can see in the chart here just the range there as they've widened and widened and widened it to plus or minus 1% around zero. Now basically abandoning it even as yields have continued to move up there in the currency.
Let's give them a little look-see.
A rising line on this chart means more
14%. Well, today's a risk-on day for sure, so I guess that's not too surprising.
To us as investors, if the change at the Bank of Japan leads to higher real yields and subsequently yen appreciation, because it's more attractive to invest in Japan.
Consolidating on that,
a
really.
long time as yields get higher, then we start to see maybe the world reallocate money back towards Japan. Japan is a source of borrowing for the rest of the world. We call
this divergence back here that we pointed out.
At zero or negative interest
Got that little rally from it.
And then buy treasuries or other risk assets. But if yields move up in Japan and the currency appreciates, well, the attractiveness is going to rewind very quickly.
It's not great.
Suddenly move back.
I don't have a whole lot to read on it either. It's very choppy.
Well, that could create a lot more volatility for the world's markets and maybe even push up.
Like literally hard to read this chart.
Not seeing that today, but it's a threat and it's something
actually
we
hard
need
to
watch
look
out
at.
for here in the fourth quarter.
Right, very interesting, because that makes it more attractive.
Yeah, I mean, you've got
how about what's been going on with oil? I mean,
got some bottoming, but it could just be consolidating. Could be bear flagging down here.
With so much going
I don't know.
on in the Middle East, but
I don't really
again,
know.
It's been
Might get a little bounce up to like
poignant as far
back up to
as
this resistance.
location, right?
30, like 40 cents, 38.
And what does it mean for us to watch oil?
See if it breaks the 20 moving average here.
Location's critical, right? Because
Or if it retests it, it should be bouncing up to like that moving average.
Is not in a major oil producing region. Of course, there's risk that
To really get a reversal, you want to see it above that 20 and really above this resistance at 38 cents. Catching a right shoulder on this shoulder. Very nice inverse head and shoulders.
It's more of a threat of
A
disruption.
bigger move up.
Reality of disruption. And
Not
what we see here
a
in
whole
this
lot going
chart
on yet,
is
though.
like other drawn out conflicts, such as those in Ukraine or Syria or many others. The reactions in oil prices have been very much similar to what we've seen on average in the past. That dotted line is the average of all these prior conflicts I have on this chart. It's a wide range, but we are tracking that very closely. Through yesterday, just a 1% rise. Obviously, oil's up 2 or 3% today, so maybe it's now a 4% rise. I don't believe a 4% rise is likely to prompt any kind of shock to the global economy or inflation. So that's one of the reasons why I think the Fed's watching this, but not reacting to it as a potential inflation threat or even risk to growth on the downside, and willing to keep policy rates on
through a trend channel, full flag.
Because we're just not
Oh,
seeing
like
these
longer
kind
time
of
frame.
shocks, stemming
Yeah,
from the,
like this channel's been the flag for sure. Yeah, that's absolutely possible. So if we break the top of this channel, that's what I was saying. Like we could be filling this gap or even retesting that high.
The best bang for their buck or find value, but how have international stocks been doing versus U.S. stocks?
Yeah, so and I've been talking about this for a while, but I still think it's underappreciated.
I'll be getting puts on the way up to the top of that channel, or maybe just at the top. We'll see. And then if we break that, that's when I'll stop getting puts and wait. These are long-term, 6 months, 6 months out. No, I guess they're not. I'm looking at February, so like 3 months now. But depending on how long it takes to get up there, maybe I'll look at March or April.
Using the equal weighted benchmark, so the average international stock compared to the equal weighted S&P 500, which is actually slightly down.
But if we break
over
that channel, I'll
period
probably
of
be
time.
waiting
Now,
for.
those watching the
I'll look at the Bollinger Band and the moving
capitalization-weighted
averages,
indexes we usually speak
but
to
maybe waiting for
have
that gap
noticed
fill at
this,
least
the
up there.
Magnificent 7 AI-related stocks have driven up the cap-weighted S&P 500. We've started to see those Magnificent 7 stumble a little bit, maybe turn into the Keystone Comps a little bit. We've started to see this become a little bit more visible
Here's
in
the
the
fleshy
overall
flush.
indices, and this
Slow play it
outperformance
here.
is becoming more visible
You guys
to
haven't
the
seen me
average
slow play yet.
investor. I think this is something that will
I have the
extend
nuts.
into 2024. International stocks are braced for bad news, trading at a much lower price to earnings ratio relative to their 10-year average and compared to U.S. stocks.
I'm not in a good position to
We haven't seen
be slow
international
playing.
stocks outperform for a very long time. So I'm excited about this widening divergence here over the past year and expect it to continue.
I guess that's a straight too. They probably think I have a straight. Dang it.
You called on this show and probably everywhere else, but I know for
Yeah,
fact
that wasn't a straight.
on this
I was hoping
show.
that
So
looked like
thank
a
you
bluff
so
card.
much. Jeffrey Kleintop, it's always great
Nothing.
to see you. It was great to see you at the Impact Conference in the Philly Conference Center there. That was a great conference, and you missed Michael Phelps, or maybe you saw a little bit of him, but he was great. But it's always wonderful to see you. Jeffrey Kleintop, thank you very,
Changing
very
your
much.
stoplights? Oh, shop lights.
Coming up, Vontier's president
Nice.
and CEO will
Changed my
join us
garage
to
lights to LEDs, like
break
super
down
bright
the
ones.
company's earnings and
Pretty amazing.
outlook
Oh,
for the
nice.
rest
Nice
of the
pair.
year. We
Oh,
will
I
be
got
right
lucky with the flush. What are they, like Golden Eagle they're called? Super bright LED lights. I can't remember how many lumens, but it's pretty amazing. Like just lights up my whole garage like it's daytime. But one of them went out pretty soon. Only lasted like 6 months or something. I don't know. They're expensive light bulbs. $6 a bulb or something. I should have returned that one actually. Probably have a manufacturer warranty. Love bright lighting in a workspace, a garage and shop. I just chop it around up here still. 230. If we have any higher resistances it wants to hit. Up above that. Next horizontal is like 431. Yes. Running out of time for this move to VWAP. Comes down there, I mean, maybe it could be violent, but a pretty big 4-day rally from the bottom there. Wonder if some will be taking profit before the Apple earnings. Kind of our last hope, I guess, for today. Yeah, I'm not buying calls on SPY. Not swing. During the day, sure. I would have down here if I wanted to. Saw this RSI divergence completed by this day. Looked good. But I didn't want to play against the trend. I closed another one of my swing SPY puts that day, but didn't open up calls. let it be. Which maybe isn't good. Maybe that's... I don't know, trend is your friend. Till the end. You have to put a cap to shade your eyes? What the heck? I get a little jumpy here. A little bit jumpy. This yield now. Bell. %? Are they not? Do they cut their dividend? Is this fake? Did they not have a dividend before? On save? $230. Time to crash. I'm so glad I got tomorrows and not dailies. I almost didn't. I was like, I'm kind of trying to time the top here, which is not what I like to do. So in case we do get this continuing to rally and melting up. Not to say I won't take a loss on them maybe, but at least I'm not getting crazy burned by theta right now. Up 1,000% on 1 minute candle. Oh, they just hit the ask. On dailies? All in every hand. Oh my gosh, what a beautiful flop. So lucky at this table. Completely sun running. These hands are crazy. They're just taking everyone's buy-ins over and over. That's the most chips I've ever had at a table. 54 million. Should probably leave the table, come back in.
that is a very complex repair setting. We also serve the repair market with more productive solutions where we bring the service technicians. And this is a great backdrop where it doesn't matter whether you're going at a very fast rate in maybe one market or a slow rate in another market. We're very well positioned with our businesses and our platforms to take advantage of that.
Thank you so much for all of this. Mark Morelli of Vontier, really great to see you. Thank you.
Thank you. Thank you for having me.
All right, in our second half of our show, you ready? Potbelly. Potbelly reported the earnings after the closing bell on Wednesday. We'll have the CEO joining us next to tell us more about the company and an outlook. And here's a look at winners and losers in the S&P.
Hi, looking jumpy. Dude, a full house. This guy's so tilty. Did I call? I folded. What? I got it straight. I folded though. Wow, I'm getting some cards now. That was weird. Oh, he called also. I didn't see that. Dude, this is insane. Two pair at the end on the river. I mean, wow. I would think I was cheating if I was one of these people at this point. Yeah, I know what you mean, CJ. I think it'll come down some, but we might not get a move even to VWAP. I think we'll probably get a move at least to like here. Somewhere in this range. But yeah, I mean, that's what we've been seeing the last... Even on the way down, it was doing the same thing, just big-bodied candles. On the way up, it's been the same deal. Been trapping everybody, trying to call for the reversal. Day after day after day. Today could be different though. After this big of a move the last 4 days and Apple earnings after hours, we might get an actual pullback, or at least a move to maybe some safety, even though it's not looking like it. I think there's a higher chance today than we've had the last 4 days. I don't know. It seems like every day we've had tapering and head and shoulders, and then
a period of 2 days, all the way back down to 105.65.
It's just failed.
Coming off as well. I want to show you what's going on with the dollar in the bigger picture, because I mentioned kind of that intermediate to longer term trend that we've been in up off this 99.22 level. And I also mentioned the significance of this 107, 108 area. You can see it coincides with those highs that we saw into the end of November last year, beginning of December. Taking a quick look here at rates, they've come off as well. Look, the 30-year on the left, we're talking about back to 4.67. You got the 10-year on the right, back to 4.66 from up and through 5%. And then just to bring those two products together, you can see both have sort of topped out here. The question is, are we going to start to roll over? Do we start to balance here, or do we just continue this trend to the upside that we've seen? But at the very least, Nicole, the move lower in rates today since the Fed, the move lower in the dollar, helping aid the move up we've seen in stocks. So all of this, I think, very much combined and part of the whole bigger picture here.
Okay, thank you for all of that. Ben Lichtenstein, good to see you. We're watching Potbelly. The stock has made a big move up today after the company reported its earnings. President CEO of Potbelly, thank you for being here. So a great quarter here, strong results. What happened? What went right? All good things. And I don't say it like the other quarters weren't. I just mean tell us, what went right in the last quarter.
Yeah, great to be with you, Nicole. At the top of the list, of course, is our top-line sales growth and continued momentum with not only same-store sales in the 8% range, but as we mentioned, we still have a major contributor to that being our traffic strategy. We've been growing traffic throughout the year, taking share from our fast casual competitors.
15 minutes to power hour.
Business in one of the most healthy ways. Big news also this quarter on franchising. We made a pivot at the beginning of our tenure under our current strategy to grow primarily through franchising, and we announced that we now have 150 units that are under agreement for committed franchise units, and of course we're just getting started with that too. Finally, margin expansion is one of the keys to our success, and with 14.6% margins, we're well on our way to the committed 16% that we have slated for next year. So, on the three big movers of driving value, I think we had a great quarter.
Won't have the flush. This guy, I just had a jack.
Stealing it away from some of the competitors, even the idea of franchising, and you said 150 units underway. Tell me a little bit about that. I mean,
thought he had the flush.
As the CEO, and this is your baby, and now, the expansion happens, and how do you, I know you must be so excited, but at the same time, it's got to be nerve-wracking.
Yeah, we are excited. I mean, listen, this is a brand that has always had tremendous potential. I've been in this space for 37 years. I've been with Potbelly now for over 3, but I've recognized the brand quality for a couple of decades. And when you have a great brand like we have very high volumes at our unit level. This year, we're going to end at $1.29 million a unit. We've got good margins, low cost of investment. Those are the types of things, at least from a financial perspective, are very attractive to franchisees. And the brand had traditionally grown through company unit development. So our shift in strategy means that we can offer that kind of financial opportunity to franchisees. And in a space, in the fast casual space, it's really attractive to them, a brand that they identify with, an operations format that
a
they
little
get
more
excited
rippy there on
about.
SPY.
And we've got all this white space.
Rippy.
And I think one of the special things, too, about our franchising potential is this is a brand that has grown coast to coast and northern United States down to south of San Antonio. So we're 430 units strong, but a lot of 400-unit companies are still regionals trying to prove that they can grow national, and we've already proven that. So franchise candidates know that we travel well, and we've got all this white space for them to grow and build. So it's a great
That's
time
a table.
for us.
Look at this.
Yeah, and more people will learn more about Potbelly. I don't really see any in New York City and Manhattan, so I'm sure one's going to be coming my way somewhere in New York soon. Maybe I just miss it because I know it's really based in Chicago, right? So, I mean, this has got to be part of the plan, is expanding this footprint. Tell me a little bit about, you mentioned the foot traffic and same-store sales growth. It really sounds like you have great success. People are coming in. You have some marketing initiatives, bringing them in. The digital side of things, how's that going? Do you use some of the third-party delivery companies? How do you see that going forward? You know, people coming in the stores versus the digital side.
Yeah, the good news is it's a balanced strategy. You know, ops and marketing are always the ways that you're going to improve outreach, awareness, and drive traffic into our shops. And that's been our approach. We really spent a lot of time working on strengthening the operations, cleaning up our shops. We've got a different leader at the head of operations. Throughput's really critical for us. Our staffing and our turnover and our retention has never been better. And I just really am super proud of our associates and our managers in the field. They're doing a great job. On the marketing side, this is a brand that traditionally didn't invest a lot in marketing. And we saw that as big upside. When I came on board, we were still spending less than 1% of our revenue on marketing the brand
I was looking for a
outside of the
2%
four
day.
walls. And you know, the industry would tell you that the average in this space is around 4 or 5% of revenue. So we've been stepping that up over the last 3 years, ending this year at around 3%. So we're still underspending our competition.
Crazy.
But we're doing it in a very disciplined way as we grow that number. We've been testing each step into the digital space that we've been working on and looking for returns on those invested dollars that keep driving the top line. This is a brand before the pandemic that was doing under $1 million a unit in sales, and like I say, this year we'll round out at just right at 1.3 million. So all of that is top line growth. The digital itself is where we're really, I think, thriving. We've reinvented our app and our web and our digital interfaces for our customers.
Yeah, it's pretty close to
Our Perks
431.13.
loyalty program delivers more and more strength for us every quarter. In fact, my comments yesterday indicated that we've seen a shift now. Our third-party DSPs, the delivery service providers, are no longer the majority of that digital business. We keep taking share and bringing that into our owned assets, our app, our web, and our Perks transactions. And that's great for our customers because it's a better model for them. It's certainly, they don't pay that premium.
I haven't even really built much liquidity for this rally.
It's better for
Got
us
this
because
little
we
bit
get
right
that
here, this little stop on it, but
relationship with our
it's just been
customers.
kind of
We can put them
melting
in the
since
nurturing flows that
middle of the day.
allow us to speak to
All
them
this
in
was
ways
built
that
up.
work really well for them. We really think we're just getting started, honestly. The digital approach that we have to outreach
Could have
and
flipped
connection
back to calls there. I just, again,
is
I didn't like
leveraging that
the
spend that
risk
we've
reward.
put in place, but as we grow more units,
Even
and
now, like,
we
this
probably
would have
in
been
the
hard to
future
hold through
will
all that.
continue to invest incrementally in those marketing dollars.
If I had any
we
stops, I
think we
probably
can
got
just keep
triggered on this
going.
drop.
Right. Great to see you. Bob Wright, thank you so much, CEO of Potbelly. Thank you.
Great to be with you. Thank you.
Yeah, and looking forward to the expansion, too. They're already in so many states all over the United States of America. Coming up next, our panel is ready to talk all about Airbnb, the earnings, and what you need to know in the holiday travel season, too. Next.
Maybe a double top here. You really need to start breaking through some levels though, for this to actually reverse. Even to VWAP. Got a long ways to come down. Minutes of power hour.
Okay. Psych you up. Go and die. I wonder if he had 2 pair. Oh, he got on the river. Are you kidding me, dude? I should have been bigger. He did that one check. I thought he was slowing down his play. I think he didn't have anything on the flop. He had an awful hand. 4-5. Come on. Just straight out there. Fold. Erase. Fold. Yeah. Oh, I almost got this straight on the other end. Or no, I did. He had the higher straight. I got so lucky on that other hand. That sucked. 2 pair on the turn and then the river. I can make your fake out. Good morning in interling language. Spoken in Scandinavia, Russia, and Ukraine. That is neat. Kind of need to see his cards. Yeah. Thought either king or a 5. Weird how this game just streaks people. Violent $3 flush. Por favor. More tapering up here. Maybe. Yeah. Don't know if we're gonna get it today though, we'll see. Still have an hour. Can't believe he got a low pair on the turn after I'd pushed hard. Pushed harder. Called. He got 2 pair on the river. This dude. So lucky. Say. What do you say? What do you say? What do you say? Got a straight. Just sun running. Not worth the risk. But straight. I'm gonna push his streak a little further than it should. I still consolidating up here. 1.8%, almost 2% on the market today. Ticker's up 20. Wow. Beyond's up 20. Almost 12% on space. Wish I had a hand I could slow play this a little bit. A little slow play would be fun. Playing aggressive. Catch him. Mama said there'll be days like this, there'll be days like this, my mama said. I would have won that. Not convinced by. Do a little bluffy here. Hope to land a 5. Haha. Would be too obvious. I mean, it's disguised, of course, but. This guy, they both folded? They're both bluffing. Oh, he was an easy fold. Then I realized I gotta play even slower. Oh, how you doing? Oh shoot. I mean, I'm trying to call 200 and this got re-raised to 900. Bluffing. Didn't mean to call that 900. It's a party. Round robin, who's betting pre-flop. These guys are pretty bluffy in here. just better players maybe in that other table. I don't know, I was getting such good hands on that table. That was crazy. It's easy when you have good hands. Spy, let's see, 30 seconds to power hour. It's all in. All a bluff. With 2 pair on the turn. Big pot right there. He's out. I've had enough. Morning. Dumpy on the cues. This is definitely starting to roll over. We shall see. Power hour flush. Holy crap, that was loud, I'm sorry. Oh wow. Oh, that's a grimy flush. Like an old busted up toilet. Clogged plumbing. Nice straight. That one sounded like he was flushing something down the toilet. Oh, listen to that delightful flushing sound. That's the kind of toilet I want. Like a spring creek. No flushy. What do you have for breakfast?
It all belongs to the other side. We live, we love, we.
We both had nothing. Surprised you get 2 pair on the river. We're consolidating on spy. 3 minutes after 3. There's a red candle. I don't believe. What kind of flop is that? Daddy. Whatever, dude. Whatever. Good job. for celebration. Ham and coffee? No wonder. Spam is the staple in Hawaii. You still eat spam, Maui? Old habits die hard? I don't know if it's the same on Maui. Probably. I know on Oahu that's like staple. Yeah, good risk to reward up here for sure. I'm so glad I didn't get dailies. I should make that a permanent rule. No more dailies after 12. Unless I'm opening up a trade like right now on a good setup or something. But if I'm opening up around 12, this is so common just to have that midday chop to burn theta. Jeez, these puts are bleeding though still. Had no pullback.
Jostling of the macro narrative when we see yields on the low end of the range for the 2-year and the dollar slipping, but nothing's really broken out of their ranges. So until that happens, let's be careful here. There is still this like trigger
Bleeding chips also gotta get reset
among the equity market participants,
I'll
it
do it.
seems, and I guess bond market participants
figured you were
too,
bluffing.
to try and game the future of the Fed path, particularly with an eye for an eventual easing. And it's just a hard thing to stomach when, number one, the Fed has told us they're not even thinking about cutting rates.
Maybe
and
thinking
we
about it.
still are in a very robust employment and, frankly, economic situation with a print literally in the morning tomorrow. And the last time we got that print, it shocked to the upside with 300,000 jobs. So people right now are piling into high beta stuff. The SPHB ETF up 3%. Look at ARK-K up 8.5%. I mean, this is a real effort being made here. But if it is tied to the market trying to game that future reversal to an easy path from the Fed, that is a risky game to play. Here's the chart of the ARK fund, by the way. Nice little bounce there. But again, one that has a lot of work to do if it's going to claw back into the range closer to the highs. All right, let's bring in our squad and let's get this conversation going here. Kevin Green with me to continue our conversation. Let's start with the technicals here, Kevin. I mean, there's definitely some interesting stuff, and there's some pretty big events this week. So I don't want to like blow off what's happening as unimportant, but to me it just seems like we're still looking at a lot of the same ranges on these charts, and so we have to be a little careful before getting carried away. Is that a fair way to think about it in your opinion?
Yeah, definitely. I mean, at the end of the day, I think in the next 24 hours, we're either going to break to the upside here or we're going to break down from a technical standpoint. The stars are really aligning for both bulls and bears. And if we look at a 1-year daily chart of the E-mini S&P 500, we can actually call out a couple of areas to really focus on here. And I actually have 4 different indicators on here. And the reason why, Oliver, is because at the end of the day, we want to be able to identify the most popular indicators that everybody else is really looking for. So we talked about this downward bull flag, if you will. You kind of highlighted it in your intro.
See if I can
here.
still
So
play this guy a little bit.
Making lower highs at the end of the day here. We are testing the higher end of that channel. So we're either going to once again break to the upside here or we're going to break back down. But the reason why I'm really focusing on this, the 43.32 area is going to be the area of resistance that I'm keeping my eye on. If we do break to the upside, the next area is going to be 43.50 and then 44.40 here. Now, the reason why I put these indicators on, and there's a lot of them, but we talk about them all the time. Stochastics, the short-term moving average did come out of the oversold line, and we are seeing it cross over its long-term average. That is a bullish indication, right? We also have the RSI. Now, this has been in a downward trend since July 18th, before the downside move even occurred. But we are making lower highs and also lower lows. Now, today, we have actually seen that downtrend being broken. That is very bullish, especially when you're looking at the range of this,
That's the RSI?
this downward action.
The
exactly,
yellow dash
that
line
RSI.
there? Okay, so we're trying to kind of get out of the funk.
Exactly. And the longer that we have this type of divergence, if you will, and we break above it, the stronger that base is for a move to the upside. Once again, another bullish indicator. CCI was in a bullish divergence that completed on October 26th. Once again, bullish. Now, the only thing now is the MACD at the bottom here. We are seeing the shorter duration moving average, the 12 EMA, crossing above the longer term moving average, the 26 EMA. That is a bullish indication for the near term, but it has not crossed over that zero line, which is the long-term
2 trades a day is good.
indicator. So once again, they're all kind of telling you a different story, but if you are a technical trader, you can see why this is a big deal for today, especially that RSI breaking out to the upside here today. If it can actually hold this, this does indicate that we might have some more room to move in the upside.
That white line there, the second to bottom panel, which one's that? That's stochastic?
The white line at the second to the bottom there is the CCI. So the CCI
check this one down. Oh, I forgot. I thought it was last. Whoops.
It's a
What I raised.
Flexible oscillator, if you will.
I think I
That
didn't.
RSI, that second to the top, the one that has that line showing that bearish trend to the downside where we just broke today, that's going to be probably the number one indicator that I'm really focusing on here. That and the MACD cross as far as making a longer term bullish case.
Yeah,
having this move for the last month
it doesn't look like it's coming down.
The ego on you.
Bearish
man.
setup and breaking out today could indicate that you could have 2 to 3 months of bullish action to the upside.
Usually likes to start making its way before.
Technicians really look at it.
All right. So if we look at just the top
Too long
line
before.
price, we're still in this
End
channel
of day.
coming off the highs,
Thanks,
but
Guts.
some of the
Appreciate it.
second
Gifted
quarter
to
momentum
membership.
measures
Psych you
are
up.
turning a
Well
little bit
deserved,
here
sir.
with the
Thanks
potential
for
to
the
kind of launch
gifted
us
membership.
into
Guts.
maybe
Appreciate it,
a
man.
breakout of that down channel. And if we do,
Very
then
kind,
it seems
very
like
generous
anything's possible
of
again.
you.
So I guess that's why the tension is pretty high right now and elevated, where, you know, the bears are looking at it saying, all right, if our trend off the high holds, this is an amazing entry point. The bulls are saying we just need one more day like this, basically, and then who knows, we could be home free again, especially with Apple coming out this afternoon, the jobs tomorrow, all big events. As far as stocks go and earnings, the biggest winner in the S&P 500 today for much of the session has been Starbucks, and a big pop. I know you had a thought on that. Why is that the most interesting one to you today?
Well, it's been one of these stocks that has been lagging here when it comes to consumer demand, especially when you're looking at China. So what I like to see for today is that consumer spending continues to rise. And we're not only seeing it here domestically in the United States, but also internationally. We did see total sales actually increase around 11.4% on a year-over-year basis. Now, China did show some growth. The same store sales actually grew by 5% on a year-over-year basis. And customer visits actually went up by 8% on a year-over-year basis. But we actually did see the average spending drop by 3%. Not surprising. That also aligns with some of the economic data, the macro data that comes out of China. But once again, once you have some of these seasonal factors, especially their seasonal menu when it comes to fall, the spice lattes, if you will, it seems like that has driven
This is the same wedge from this morning.
into these stores, and we continue.
That's what I was concerned with. That's why I did close some of my puts there.
Consumer story, not only here
not
in the
many
United
at all,
States, but
though.
also reflecting what's happening in China. And I think it's a really big bright spot for the broader market, especially those that have.
Is that what I raised?
Exposure.
All right, nice, well said. Really interesting comeback here. I got to say, that one to me was like one of the less surprising moves. I mean, it's a good, exciting move, but it felt like the market got really carried away and bearish on Starbucks with the China stuff, you know, and some of the labor and the leadership kind of back and forth. But at the end of the day, this has like become a staple.
Maybe
of
could have
American
called that.
lunchtime.
I don't know.
Even dinner depends. I'll take the bacon, egg, and cheese.
Definitely should have.
5
Dang
PM,
it.
8 p.m., 8 a.m.
I have to try last 2.5
McDonald's
hours.
missed that market. They, too many McDonald's are iffy with the all-day breakfast. So, all right. Thank you, Kevin Green. Appreciate it. Let's bring in Brian Frank. Let's talk some more stocks. He's the CIO at
Jesus.
Frank Funds. Very
What a
bullish
walnut.
day here, Brian, and the market trying to string together enough gains, as Kevin pointed out on the charts there, to maybe break out and make a stab back at the highs. Do you think something like that's possible?
Yeah, definitely. We've had 3 down months in a row. It's been many decades since we've had 4 down months in a row. Things are starting to look a little bit oversold. I think some of the CTA strategies are maximum short here, which means they're going to have to start buying if the markets continue going up here. And we're in the fourth quarter. We're headed into the 2 best months of the year historically. So definitely, I think there could be some buying happening in the next few weeks.
We've got some specific stocks you're looking at, so it seems like you believe still equity.
About to make a new high, maybe.
Yeah, absolutely. I'm an active manager. Of course, I'm going to say that, but I think the numbers actually back it up too. You just look at the Magnificent Seven and you look at Apple trading near 30 times earnings. I think one analyst said Apple needs a new planet to
They're
sell
after hours.
phones
I'm
to
going
because
into
they've
it.
pretty much taken over this one. So the law of large numbers, it starts.
We're not there
it
yet.
starts
45
being real
minutes.
for companies these size, and generally, the largest stock in the world won't trade at 30 times earnings because it runs into the law of large numbers. So thanks to some of the declines in the last few weeks, which was especially difficult in the Russell 2000, kind of my land, mid cap and small cap land for the Frank Value Fund. There's some spectacular deals. You're finding things that are much, much cheaper than Apple and arguably even safer because you can find some non-cyclical, more defensive type companies that are trading at great valuations.
You've got maybe one of the most interesting picks that I've ever really heard, to be honest. And I have to admit, I didn't even know that it was a thing. Ticker DEA. Basically exactly what it sounds like. Tell us about how this works, because it's real estate slash kind of like government housing.
Yeah, they actually own the buildings that the DEA runs their crime labs in. They own buildings that the FBI works in, and they also own some veterans hospitals. So the tenant is the U.S. government. So you can imagine that they get paid 100% on time every single time. And that sounds like a spectacular deal. But what happened with this REIT was what happened to every other REIT is they all got crushed because of what's going on in commercial real estate. Obviously, there's some huge vacancies there. Working from home has absolutely turned that industry upside down. But thanks to factor investing and ETF investing and, just the broad-based indexation, you tend to get babies thrown out with the bathwater. So my job at the Frank Value Fund is to find the babies. And I think this is definitely one of them because these are highly secure buildings. They tend to have security out front. They tend to have gates. They tend to have, radio resistant walls. I mean, these aren't easily movable units. So even if there's a vacancy next door because some tech company left, the DEA is not going to move their office to an insecure location. So I think it's a great investment because it's gotten beat up enough that it's now has a 10% dividend yield. And these are long-term leases. This is a great management team. There's a lot to like about this company.
Yeah, interesting. Stock's just gotten killed. Is it just kind of getting treated like real estate in general?
Yeah, 11.2. That's good. Normally, like that when you I would agree. You don't get
thrown out with the rest of the market
setup.
But right now, I think
there's
a big hope that maybe the rate crash is
sometimes
done
you get the
5%. Is that
reversal or setup
is
happens in there, but
cash flow that should be there regardless of
probably not. Majority of the time.
I think 100% you're looking at it the right way. Both you need to be aware of where the 10-year is, but you also need to be aware of the cash flows.
Just set up what you would have missed, but
because the United States government is a big tenant, we know those cash flows are very solid. And management actually locked up their debt as well, so they don't have any variable debt anymore.
No, there's no setup for any other play.
Rates continue to go up. This company's cash flows are fine, but yes, if this is the top for rates, U.S. rates, then this is probably the bottom for these REITs. So I think it's a great time because it looks like from the price action in bonds that investors are starting to lock in duration. They're starting to price in the Fed pause or even the Fed cuts, as you mentioned a few minutes ago next year. So I think it's a great time to be looking at this stuff, but you have to get the right ones. You can't just blanket invest in commercial real estate because a lot of the tenants are pretty weak, but the U.S. government, I would argue, is a pretty good payer.
Sure. Okay. Seems like. And I guess the market a little bit more confident they can pay their bills after this week's Treasury plans, too. That's like I guess a market joke. Okay, let's talk one that's on the upside, though, because you're not just going into the trash and picking stuff that's gotten thrown out. A food business that's actually McDonald's, what is this, subsidiary, Arcos Dorados, ticker ARCO.
Arcos Dorados is actually the largest franchisee of McDonald's in the world, and they are primarily in South America and the Caribbean, and their biggest market is Brazil. So the way I like to describe this company is there's one McDonald's for every 20,000 people in the United States. There's one McDonald's for every 300,000 people in Brazil. So it gives you an idea of the expansion opportunities that this company has. But it also got hurt earlier this year. But yes, it's been rallying lately. but I think it's more of a defensive play and a growth play at the same time. So you get the stability of McDonald's. They just came out with their earnings this week, which were pretty great. But I think a lot of these companies are held back by Ozempic and the weight loss drugs. Investors kind of got carried away in selling some of these food companies over the last quarter, and that's the opportunity. This is a spectacularly cheap company with a great valuation, and it has growth prospects. So that, to me, that's the best of both worlds. We don't just go dumpster diving in the fund. We also look for high quality companies that we can grow with over the years. And there's a lot of expansion ability for this company.
Interesting. It's like a McDonald's play, but region specific and a different equity. And I think I figured it out too. The Arcos part I get. Dorados I had to think about. But then I remembered El Dorado, so I'm thinking it's Golden Arches.
You nailed it.
All right, thanks,
Good
Brian.
Spanish. Thank you.
Appreciate the stock picks. All right, fun ones there from Brian, CIO at Frank Funds. When we come back, a little bit less of a fun one for investors. For those who have still been in the vaccine and COVID trade.
20 minutes into Power Hour.
Moderna,
Nothing but just consolidate up here.
Moderna with a fresh decline this past week around the earnings. We've got the Chief Financial Officer coming up next. Let's keep talking some specific earnings news with Moderna down about 8% right now. The shares have now lost roughly half their value in the past year. Joining us, the Chief Financial Officer at the vaccine maker, Jamie Mock, joins the Schwab Network. Jamie, thanks a lot for being here this afternoon, and welcome to the Schwab Network.
Thanks for having me, Oliver, and it's nice to meet you.
Appreciate that. Likewise. You know, I think looking at this as traders and investors, there's sort of a very obvious element to what's happened with your guys' company, and then there's maybe a little bit more unknown. The obvious part is that we all knew that eventually post-COVID, whenever that kind of world emerged, that the vaccine makers like yourself would struggle with the declining sales. But at this point, it seems like the analyst community has still been surprised by maybe the extent to which people aren't getting vaxxed. Or tell me what, in your mind, maybe has unfolded in a way that you didn't quite expect.
Yeah, so thanks for the question. So, yeah, particularly what's unfolded was we had a wide range of outcomes, particularly in the United States from a vaccination rate. So at the end of our last quarter, we guided $6 to $8 billion of global sales for the year. And that range was really dependent upon essentially whether COVID vaccination rates in the United States mirrored last year's vaccination season, which was a little over 50 million vaccinations, or what we thought might have a chance that it should go up. Because if you look at it, COVID is 3 times
1940s water closet.
for
It's
the
a nice
healthcare
flop.
system than flu. And flu is 150 million shots per year that Americans take. So we think that it'll go up over time, but what's turning out here is that we're actually on the lower end and closer to last year's fall season.
And is that, it sounds like it's not necessarily a result of like weather,
Slow play is king. Maybe someone's got a king.
in general. It's just that people are choosing not to get the booster.
Oh, this is great. Maybe someone has an
more
ace.
traditional flu shot.
Use raise.
It's a choice being made, right? That it seems is surprising a
No.
little bit.
Are you kidding me?
Yeah, so as I mentioned, 150
No one had
million
anything.
Americans every year on average, and it's been pretty consistent over time, go in
This
and
guy
choose to get a
playing
flu
pass
shot.
ball all of a sudden.
And so our belief
It
is
did
that
sound like a 1940s water
someday
closet.
that the amount of people choosing to get COVID should at least mirror that, because COVID is actually creates more hospitalizations, creates more deaths.
The
But if
market's
you
about
look
to
at
flush, CJ.
2022,
Don't worry
only
about
50
it.
million Americans chose to get a COVID vaccination or booster. And it looks like through the month of October, we're actually trending closer to that. So it seems like we now have 2 data points in a row, year over year. And so I think there are reasons to believe why it could grow over time, but at least for the foreseeable future, it's on the low end of that range.
When you talk about it growing over time, so then is the idea that people will just get a COVID booster instead of what they would have done as a traditional flu shot?
Like, what
so
the
that
heck?
it's like a one stab.
50s Portland
fits
pointed a black
everything?
stripe around the rim.
Kind of like the idea that it will replace
Very
the
specific.
traditional flu shot?
No. So good question. No, we need 2 vaccinations for flu and COVID. They are different infectious disease that you need to vaccinate against. However, we are at work, and we just announced results on our phase 1/2 trial and have just started a phase 3 trial on what we call a combination vaccine, which actually includes both a vaccine against the flu and a vaccine against COVID. And I think that actually will help more Americans get a combined flu and COVID shot, which should increase the number of people that get a COVID vaccine over time, because it's much more easy from a convenience perspective for anybody, as well as the technician, to administer it just 1 dose versus 2.
That's very interesting, and I think that's really getting to the point here. How do you, I guess, make financial expectations without, I guess, kind of knowing where the COVID virus will go? Because, I mean, it's the first time we've seen this thing. Obviously, well, the initial onset was the first time we saw something like this. And how do you make that distinction between whether or not one needs the separate COVID vaccine, or do you guys just feel that going forward, every season comes around in perpetuity, people should...
No, I don't remember. Yeah, I wasn't pooping on any potties in the 50s. Not to say I haven't used a 50s toilet before, but I don't think I recall. I mean, porcelain toilet, sure. Porcelain pony? feel like I've maybe seen a picture of that. Let me look. Browser's laggy. This is fun when you're trying to day trade. Holy lag-a-moly. I don't think you're that old either, Psych. I'm not seeing it. Unless it's this thing. Oh my gosh, it's lag. Is it that thing? Are you like riding a pony? A kid's toilet? Pretty awesome. To look like a pony. Okay, 30 minutes to close. SPY just chopping around at the highs. We're not gonna get a VWAP test. I don't think so. Not until maybe after hours, if at all. That would be a pretty big drop. Might not even get any sort of pullback here. Less and less likely as we carry on, getting closer to end of day and people aren't taking profits. No closing, there's no hedging going on, it's just drifting off into the sunset. Market makers are perfectly balanced, everything's all kosher. Or neither. Maybe no balance. Doing this into the close. Which is pretty similar to what we've had the last 4 days. This pretty epic rally. The wicks, the top wicks are very small. I'm not getting cards on this table. Hey, there we go. Let me guess, you got two pair there. Loves river and two pair. Black stripe around it. B33. after I close this call, miss this trade. Got out. Stopped out. Let's see. Or no, I should have just stopped out. I think I'd already stopped out once though. We'll have to review the trades. So today I was trying to take way fewer trades and just go bigger, which potentially would have worked, but I got sick of stopping out. And so just held, and market decided to stop moving at that point. I mean, it did move against me, but no structure, just melt. Could have stopped out there. Realized a smaller loss. Considered going calls, but didn't like at this level. And I probably wouldn't have held through all this crap. And now there's not even a setup for the downside. A bit bigger. Nice, re-raise. He might have a straight. There's a flush. Another spade would be kind of neat. Easy. Dang. It's a hard fold. Might as well just gamble. Yeah. Wait, you got straight with it. Oh, you had a queen ace. Nice. Nice. Could have had a full house at the end. Could have had a flush. Guess it was worth it. Least most enjoyable day trading ever. Gotta have stop losses. No, I didn't stop out on that one today, but I did stop out earlier. Can't have the red days be big. $336. 37. New high of the day there on SPY, 430.53. Do it. This. Buy. Not a whole lot of structure for a big move up here, but maybe a little move up before it comes cascading down, maybe. Nice little push. Do it. We're 30.63. We got 431.13. We make it all the way there for a little resistance. What's up, Taryn? 15 minutes looking at. Oh, it was an. I've seen like all black toilets. Black seat and lid. Good to see Apple earnings, huh? Hopefully it misses hard and their guidance is awful. SPY is ripping into it 1.9% now. Holy moly, me oh my. As a king, I presume. One has a bluff. One doesn't have discipline not to see. Let's see who it is. I think king, bluff, no discipline. Oh, he was the one. What? That was a crazy hand. I think he had trips also. Wish I could see it a little longer. To analyze, I can't even see like. Oh. Everybody's got to do it. Oh, didn't mean to pull that. He does have to do it. All right, SPY, here you go. Minutes to close. Look at this. High of the day. Crazy. Wild. Bullish day. Santa rallies just coming in quick and early and fast. Above the 20. Getting close to more long-term puts. Prices. That is neat. Oh, you gotta go. 5 ace, you got a flush? I didn't even see the flush. All I thought was bluffing the jacks, or the 3. Wow, that was my mistake. Got pretty fortunate, I got trips there, I guess. I didn't even notice a flush out there. 15 minutes soon. Oh, nice 2 pair. DJ, there's no way you made 400% in this pump. Bubba, you have to be punished, man, I'm telling you. You even got punished and you still came back for more. Said this last time we didn't have any kind of mean reversion. We closed at the highs. It's not enough punishment. $15. We are tapering up here even more. It's high. Maybe it's just consistent with this one, actually. Just retested the high of it. Well, maybe earnings give a little drop. All right, almost 10 minutes for Fugazi. Here we are again. We are again, another day. No mean reversion. No safety. Another big full candle. We'll see. Maybe spell dump % after hours. That'd be hilarious. Crazy close on SPY. Pick up fully a full candle. There you have it. That accelerated drop through that channel. Support lines up with where we are right now for resistance. People moves it around though in the different time frames. Got a message about that, it's so annoying. Tempted to hold these till tomorrow or do that, but I don't know. So if we have a gap down, like we'll definitely come down tomorrow, but might not have a gap down, and that's what I'd need. Nice bluffing, dude. Paranines. We're in Timmins Fugazi. This is crazy. Look at this. Most mellow Fugazi ever. There you go. What do you know? A pump into it. Too high of the day. Woo! That. Get that. Wow. Cool, man. Whether the contract did that doesn't mean that's what you did. And I'll check the contract. I'll be surprised. No, I'm not seeing it, man. 1535. Pump was up at what, 1541. If you got the very bottom, you'd gotten it 55 cents. The very tippity top was $1.50. That's if you literally got filled at the very bottom, got filled at the very top on that little drop. On the SPX, November 2nd, 43.15 put. Six minutes to close. Buys at the high. I don't even call. Here's the chart of that contract. Here's the low. 55 cents is the low, low, low. High, high is 150, which is a pretty big move, but yeah. Didn't bottom ticket, didn't top ticket, and still not 100%. We're friends already, CJ. You don't gotta lie. I made it to 430.92. Congratulations. What does Apple have in store? Now I just hope they report before 15 after. Guess it's good I didn't. I got 15 minutes after close, CJ. So I'll have, if Apple reports that time frame, I'll be able to close it. If it's bad, especially, I think we'll see a pullback even. Just a little pullback. But yeah, I'm just playing Apple at this point, more or less. All right, let's see, 2 minutes to close.
It's like everything changed, basically, like in the course of 48 hours.
Yeah, the perception got better, and that thank you yields. Keep in mind on the 10-year, we're still in an uptrend there. So, you know, it's nice to see it come off that level that was around 5. It's nice to see that we didn't break 5 and everything like that. But Oliver, if you look out at, you know, I think corporate guidance is one of those key leading indicators that you can get to, you know, who else is going to have a better read on the economy out there than corporate CEOs. Why do I bring that up? Well, if you look across what some of these industries that are getting hit, look at, you know, Yum China, look at Estee Lauder, look at Paycom Software, look at UPS, look at Mattel, all of them suggesting kind of a soft Q4 that's coming up here. Then you look over into the Eurozone and you look at the PMIs there. We recently hit a 35-month low, sharp contraction in new orders. What's my point? Yes, it's great that yields are kind of pulling back. Yes, let's say the Fed is done. But let's keep in mind, they're still allowing the runoff of the balance sheet. We still have Treasury issuance that's coming up, and we're still kind of baking in the 525 basis points. So let's not get too excited too quickly. This isn't a permission slip to just go out there and buy everything because it looks like the Fed is done.
Yeah, amen. And feels like, you know, with the breadth of this rally that we haven't seen in a while, that it's like, you know, ushering in something different and new. But until these charts for bonds and the dollar truly reverse, ultimately, we're still in the same situation. We got to jump because the bell's ringing literally right now. Nate Peterson, thank you very much. Great stuff. And there it is. Stocks into big day with a big rally. Russell almost hit 3%. Look at that. So the beaten down trade bounces back the most. Stocks that swing did just that. High beta shares up 3% on average. Quality stocks were right behind them though. And value in the mix too. About a 2% rally in momentum and high quality factors. Even low volatility funds and vol minimization strategies returned 1.5%. Every single sector, 11 for 11. When we come back, it's earnings time.
Oh, you did
have
calls.
To be patient for Apple because they make us wait for it, but we do have some fun names booking: Coinbase, Live Nation, Block, Monster Beverage, DraftKings.
We decided we're playing it, even though I didn't want to.
Young lady who is mid-30s.
Playing it very risky too. Another freaking day like this, man. Please don't have a 7. Ooh. If I can bluff raise him. Nice. Gonna rebluff me, I love it. Oh, you had a king also, well done. I'll split it with you. There is no ticker for barbecue. Yeah, you don't have any shares in your account if you used to hold barbecue. Okay, let's see. Let's sell these puts in increments of 5. Apple coming out.
Some of these comps are going to get a little bit harder now as some of these global economies have lost their initial, because it's really kind of a goalpost thing, which was that the U.S. bounced back first, and so we had our like reopened trade, and then it was the international markets reopening, but then it was like China still, lagging, and now that it's basically a year kind of since Europe and international trade started, the bar might be a little bit higher here. They did report that room nights booked rose 15%, and their gross travel bookings were just shy of $40 billion. So that looks like about $1 billion beat to my eyes, Kevin Green.
Big miss on Apple. bad guidance. Share offering, like let's just get crazy.
Here, Oliver, because
let's offer a bunch of
demand that
shares.
you're talking about here, that
You
reopening
need it.
trade. What I do believe could be a little bit of a headwind is if we continue to hear this commentary around slowing in the current quarter because of geopolitical events and things of that nature. I think that's going to be the biggest risk moving forward when it comes to bookings. I mean, at the end of the day, it looks like
got like
the
8
room
minutes before I have
nights
to close
booked
these.
actually does look like a really good number, that 15% year-over-year comp. But I think we still need to kind of figure out how the consumer is doing moving forward. If they're continuing to see individuals actually booking travel for not only the current fourth quarter, but also what does Q1 look like. If you're looking at some of the airline data, it has shown that we might see a little bit of slowing, and they have been a little bit more cautious, and that's going to have a direct impact when it comes to bookings earnings for next quarter.
Okay. The balance in the company has far exceeded the other competitors in the space. Expedia is also going to give us earnings this afternoon. I just want to glance at that real fast. Those shares are actually popping a little bit. They did beat the expectations, and their booked room nights were up 9%. So we do kind of get some of that difference showing up here. Not a bad, number from Expedia, but again, right there, Nicole. I mean, that's pretty much it. Bookings up 15%. Expedia bookings up half, basically. A little bit more than that.
Right. So it shows you bookings is doing something right. If they have the nights booked up 15%, the gross travel booking at nearly $40 billion. But the fact that they see that rise of 15% to Expedia's 9%, it shows you that right there, at least on that one metric, that booking is certainly outpacing. The other thing worth noting is the sort of cautionary tone that we heard from Airbnb going forward, and whether or not we will hear something like that from Booking as well.
Okay. Right now, shares are down, giving it back a little bit. Expedia hanging on now. This might just be one of those situations, Kevin, where the past, performance, you kind of like flip.
Flies down 0.05 after hours.
Where the market sentiment
Waiting
is.
for on Apple's earnings
especially
here.
after we had this big rally today and this whole thrust of breadth that, a company like an Expedia and the general travel trades that have just
gobs
gotten
of cash,
thrashed
and yet they still need to do a share offering.
Because Booking's not one of them.
Right.
But everything else, basically, airlines, even the mighty cruise lines started to fade pretty hard. The whole U.S. travel trade has gotten wrecked. I'm not sure that these numbers suggest that it's that bad, And Expedia's up 9%, Booking's up 15%. I mean, it seems like we're in decent shape.
For the most part here, I think when you're looking at Expedia, they also did reiterate their full-year guidance.
I just hope it comes out in time.
Double-digit top-line growth, and they also indicated some margin expansion. Now, knowing that they have margin expansion, but they're reiterating what their top-line growth is going to be, that also
green candle
indicates
there.
that this is more of a margin story going into this quarter as well, which is why they might be getting a little bit of a premium in the after hours. But when you're looking at top-line growth, looking at bottom-line beats, I think at the end of the day, maybe Expedia has been a little bit oversold or has been lagging when it comes to booking, and now we might see a little bit of a rotation like you're talking about.
Okay. Let's talk some more reports here. We'll put those aside for a second. And speaking of travel entertainment, the Taylor Swift mania that has swept the nation looks like it might be helping Live Nation here a little bit. Despite some kind of tension in the whole ticketing process over the past 6 months or year or so, it seems like ultimately the concert business bouncing back pretty hard, and part because of the Taylor Swift effect. Nicole, seems like it's showing up.
Got it straight now.
You've seen a very
coming
resilient
up.
consumer, the revenge consumer, revenge travel, and all these things. And then people want to get out. I mean, you did have a prior real big issue
flush out
for
there
Live
also.
Nation, and that was the class
Higher
action
pair.
lawsuit.
Only one of you had it straight.
They were accused of having monopolistic practices for live events and ticketing, and this all came from Taylor Swift's Eras Tour. And
from another earnings? Apple's
in the way they
not been released yet.
are being accused of, and so this class
He's
action
out,
lawsuit
dude.
sort of really weighed on it. But
Give me chips, let him go home.
There's no denying that when you look, they really have a moat. They really have about 70% of U.S. ticketing.
Okay, I've got to close
sales.
these within 4 minutes.
Really, it's certainly a real winner as far as its market share. So as the numbers cross, which I'm waiting to see them myself, but you can see that this is certainly a big story. I would start with that.
32%, a bounce for the quarter. just in top line to $8.2 billion. And then
very sad if
total
it didn't
year
come out
sales so far near about
in time,
17
and then it dumped the market down
billion.
1%.
So the earnings are growing with it. Earnings almost up as much as revenue. Revenue up about 32%, EPS up 28%. So it seems like not only are people going, but it's a fairly efficient business, Kevin?
Yeah, definitely, and with some pretty healthy margins as well. I mean, when you're looking at these numbers, the adjusted earnings per share came in at $72.32.
$4.30.
I
mean, they're just guessing; they don't know, right?
$67.61. That's remarkable. So you are seeing the expansion not only on the bottom line, but also
isn't it always just insider information?
Forward, they kind of talk about the innovations within.
That's just rumors or speculation.
Consumer demand continues to be very
someone
strong.
leaked it.
No matter, it seems like they're trying to make a case that they're a little bit more resilient and for macroeconomic factors than maybe what we've seen in the past, and that might be true. I mean, at the end of the day, consumers might still want to go to an event, and maybe they do pull back on groceries or something. I don't know. Maybe that's what people are doing. It seems like that's exactly what's happening.
Go to the Eras Tour.
Earnings at this point.
Yeah.
Right. Exactly. Yeah. Eat or go.
How many weeks of Costco is one Taylor Swift ticket? I mean, I think it's like at least a couple months or so. Aren't they like $500 or something, like minimum to
sacrifices?
11 after.
But I love some of the stats that we're getting here, too. I mean, I know you've already talked about some of these, but just the fact 140 million tickets sold year to date for Live Nation shows, 275 million
maybe it is a not till 4:30
year to date. It's pretty amazing to see the revenue.
Hopefully it leaks and it's awful.
It's sizable, right? I mean, something's going right here overall. And when the tickets sold is up 17%, whether you think they're a monopoly or not, there's not too many places to go to buy tickets and feel confident. There's so much that goes on the internet and stuff that where you get scammed, and so people really like to go to their number one and two places, and that's pretty much it.
That's a good point. It's right into what I was going to point out, which is that for Ticketmaster, where revenue was up almost 60%, so that disproportionate gain there shows how popular
Thanks,
that
guys. Appreciate it, man.
site is that they
for the support today.
They also added 17 million net new clients. So there's, to Nicole's point, there's a recurring element to this to a degree, because they're going to blast all those users with like alerts for what they listen to and stuff, and make sure those people come back to use the same product that they used before. Is that why the margins are so good, Kevin?
I believe so. Now, I think what is going to be very difficult, though, Oliver, is this time next year, the comps are going to get really large. It's going to be really hard. Just look at some of these numbers. Concert growth was 32% year over year. Ticketing growth 57% year over year. I mean, those are numbers that are just astronomical. And so I think it's going to be nice in the near term, but I would love to hear what their strategy is going to be moving forward to continue to push this growth, knowing that we have maybe some headwinds moving forward when it comes to the consumer. And if they're going to tell everybody that the consumer just doesn't mind at this point in time, and that's what they're hearing, I think that's just a remarkable business strategy, to say the least. I just feel like it's going to be very difficult. We're going to probably have a little bit of a different tone next year. When it comes to
two letters. The solution. AI, baby. They're going to have you not been listening to like the AI music they've been making? They're going to do live Beatles tours. They're going to do a DMX hologram live in concert. I mean, I'm joking, kind of, but like to your point, the stock also at $82, still well below where it was during COVID because of that like freak thing that happened during COVID with all the speculative mania. The fact that Live Nation still traded $40 higher than it's going to trade this afternoon after reaping the benefits of Taylor Swift's like economic just breakthrough of a concert series. I'm not sure like what, look, I don't want to say I don't know what the bull case is, because I think people are going to stick and they're going to go to the concerts, but the price action wise, there is a lot here of overhang, it seems like, from the past year. And now with the comps that are going to be tough.
Okay, I closed them.
I think so too, because when you think about what you're competing against,
A little better price, I guess, than very end of day. But wow, this outdid my expectations on closing at the high. It literally almost closed at the exact high. Well done. Better than other days.
That's on right now, so there certainly
There's
is a lot.
no
But to your point,
nothing.
I think that concerts are back.
That was crazy.
Gone, and
So I'm curious on Apple. I had to close. I didn't want to hold any longer.
Remembers what it's like to not spend. Our grandparents didn't go out
I guess
to
no
dinner,
reason to
they
watch
didn't
Apple.
travel,
Just
they didn't go
punish
to
myself
concerts. This
in case it
generation
drops.
is just spend, spend, spend. So why not spend more next year?
Have stop losses.
Great,
don't add to losing positions unless if you already have confirmation.
That's one to certainly watch.
Things we all know.
All right.
Just reminders for you guys.
And the stock too is in a weird spot, still below where it was from its
Thursday.
highs. All right, thanks team.
Thanks for the support today. I really appreciate it.
Appreciate it, Kevin Green, Nicole Petalides. Nice work.
Thanks, Jay.
Right,
thanks,
we'll
Guts. Thanks,
CJ. We're going to talk
thanks,
some
Taryn.
tech and do some trading with Gareth
Thanks,
Soller.
Psych.
Speaking of, by the way, we do have Block earnings, which just came out, and Square's on the move. The old Square ticker SQ trading right now at around $50. They beat the estimate for the bottom line.
Thanks for the gifted memberships.
Adjusted earnings per share versus
Have a good afternoon, guys.
and cash
See you on
out
Discord.
generated $3.58 billion of revenue, including almost
Peace out.
$985 million of gross profit.